Okay, so starting with the computation of capital gains today. Okay, see, whenever you have to calculate the capital gains, the calculation of the capital gain is very easy, very easy. Only 6 lines you will get your answer. How many lines? 6 lines and you will get your answer. Okay, so the first thing which we have to do is to take the full value of consideration. Then out of this we will reduce transfer expense, so we will get net consideration. Out of this net consideration we get the deduction for cost of acquisition and cost of improvement. The final amount is capital gains. As simple as that. So first thing, full value of consideration minus transfer expense, we will get net consideration, and out of that net consideration we reduce two things, cost of acquisition and cost of improvement of the capital asset. Then final amount is capital gain. This is the manner in which the capital gain will be computed. This is given in section number 48. Okay, so section number 48. See, before this section 47 is also there. Okay, section 47 talks about exempt transfers that we are going to do later on. Right now, so two things are required. One, capital asset is required. Two, the transfer of the capital asset is required. Then only the profit and gain will be computed, and it will be computed in this manner, which we have just now, I have just now told you. Okay, if capital asset is there, transfer is not there. Transfer is happening, but the item is not a capital asset. No capital asset, no transfer. In all these cases, profit and gain cannot be computed. Okay, no need to do any calculation of capital gains. So the capital gain will be computed only if the capital asset is transferred. Only then this type of computation you will show. Sure, sir? Whatever profit you gain, you will calculate. This will be, then what? This will be taxable. This will be taxable in the previous year in which capital asset is transferred. So the year of transfer of the capital asset is the year in which the capital gain will be taxable. So coming here, see, we did till this part yesterday. Okay, this I have also completed now. Exempt transfers are given in section 47. Definition of transfer is given in 247. Definition of transfer given in which section? 247. All those transactions are known as taxable transfers. So your capital asset will be transferred, meaning taxable transfer should happen. But there are certain transactions which are treated as exempt transfers as per section 47. Okay, if something like this happens with your capital asset, there is no need to calculate any capital gain. There is no need to calculate any capital gains. Yes or no? So 47 we are going to discuss in subsequent lectures. But whenever your capital gain will be calculated, the taxability of the capital gain will happen in the previous year in which the capital asset is transferred. Yes or no? Previous year in which the capital asset is transferred. So there are 3 exceptions also. In the second part of the chapter, second part means specific charge. We are in the first part of the chapter right now, basics. We are learning how to how to do the basic calculations of capital gains. Once we are through with this, we are going to do the specific charge also. So under specific charge, there are 3 sections which we are going to study. These 3 are there in our syllabus. In these 3 cases, these are 3 exceptions to this rule. In these 3 cases, capital gain is calculated and will be taxable in the previous year other than the previous year in which the capital asset is transferred. Meaning, always the year in which the capital asset is transferred, in that year only the capital gain will be taxable. Always, always. This is general rule. Okay. But in these three cases, which we are going to learn later on, okay, in these three cases, the capital gain will not be taxable in the year of transfer. It will be taxable in some other year. And that other year is not the year of transfer, is some other year only. Why it is there? What is the logic behind this? We are going to study. But right now remember, if someone asks you, capital gain always taxable in the year of transfer, what you will say? True or false? True or false? False. It is normally taxable in the year of transfer. But in some exceptional cases, it can be taxable in other year also. So saying that it will be always taxable in the year of transfer is wrong. Normally taxable in the year of transfer, but in some special cases it will be taxable in the year other than the year of transfer. That we are going to learn. Okay, no? So now see, this was the computation for which I was talking about. Okay, what you are supposed to take? What you are supposed to take? Full value of consideration. Minus what? Transfer expense. What you will get? Net consideration. Out of this net consideration, cost of acquisition and cost of improvement will be reduced. You will get capital gains. This is your short-term capital gain. Why? Because, see, the computation of capital gain is written in section 48. So as per that section 48, we are doing that computation. Full value of consideration minus transfer expense, net consideration, cost of acquisition, cost of improvement. Then we are going to get capital gain. This is the computation. This is what section 48 tells you. But there is one proviso. Proviso means exception. Proviso means exception to section 48. As per the proviso, there are many provisos, but out of all those proviso, I am talking about a specific proviso. This proviso says, if capital asset transferred is a long-term capital asset. Which capital asset? Long-term capital asset. Then cost of acquisition and cost of improvement shall be indexed before reducing it. So now will you take full value of consideration? Yes sir, I will take. Will you reduce transfer expense? Yes, you have to reduce. Will you get net consideration? Yes sir. But now instead of reducing cost of acquisition and cost of improvement, you will index them first. Indexing means including the inflation factor in the cost. Your cost which you have incurred, that cost will be inflated. The cost will be increased by including the inflation. So that you are going to do only if the capital asset is long term. Getting my point? So in order to calculate your long-term gain arising on transfer of long-term capital asset, if you reduce cost of acquisition, cost of improvement, we will not allow it. Do one thing, index the cost. Index the cost of acquisition, index the cost of improvement. Then after reducing these two things, whatever amount will be there will be treated as a capital gain which is of long-term nature. Hello sir, long-term capital gain or long-term capital loss. Sure sir. So this is what written here. See, this is as per the proviso. If you are calculating long-term capital gain, the calculation will start same. Full value of consideration minus transfer expense, you will get net consideration. But instead of taking the cost of acquisition and cost of improvement only, you are going to index it. Index cost of acquisition, index cost of improvement. That you reduce, you will get capital gains, and that is long-term. Sure sir? Everyone? Now pay attention. There is one good amendment See, read this amendment. The benefit of indexation. See, indexation is a benefit. Why? Because it increases your cost. More cost will be allowed as a deduction, lower will be your capital gain. Yes or no? It might also many times result into losses also. Because inflating the cost will take your cost too high sometimes. And that higher amount of cost, if it is reduced out of your net consideration, which may be very less, or it can be less than the index cost also in many times, in many cases, resulting into losses. So definitely indexation benefit is what? Indexation is a benefit. And if it is a benefit, no, it was available till 22nd of July only, 2024. Because see, this was an election year. In the election year, two budgets came, we all know. So the budget which came after the election, no, second budget, it came on 23rd of July. And Mrs. Nirmala Sitharaman, she came in the parliament on that budget day, 23rd July, when the final budget was announced after the election got over and the new government was formed. Again the BJP government came. Okay. So the new budget came on 23rd of July. With effect from same day only, she has made that announcement that from today itself, from today 23rd July 2024 itself, the benefit of indexation given for long-term capital asset is being withdrawn. Meaning that from now onwards, if you transfer any of your capital asset, meaning the capital asset is transferred on 23rd July or after 23rd July 2024, there will be no indexation benefit allowed, even if the capital asset transferred is a long-term capital asset. Yes or no? But will it be allowed till 22nd July? Yes. If the capital asset was transferred prior to 23rd July, no, prior to 23rd July, date of transfer was there, then you are definitely going to get what? Indexation. See, in our previous year, no, previous year 24-25, okay, we are in very special year. In this year only that budget has come. So few times your examiner can ask you that the transfer took place before 23rd July. Then you have to apply the old period of holdings. Do you remember? 12 months, 24 months, 36 months. And by taking that old period of holding, if you come to know that the asset is a long-term capital asset, then you will have to do the indexation also. And after taking indexation, whatever capital gain is there, hello, on those capital gain, the tax rates were also different. Earlier, on short-term capital gain, which was covered by 111A, if you have calculated short-term capital gain under section 111A, specific type of capital gain, yes or no? And the transfer was made prior to 23rd of July. Then on that short-term capital gain, you were supposed to pay how much tax? 15% only. But now, on or after 23rd July, when you will transfer your capital asset, you will check new period of holding. 36 months period of holding is gone. So the assets for which 36 months period of holding was checked, for all such assets, now the period of holding will be checked 24 months only. For 24 months, two assets were there. For them, 24 months will only be checked. For the assets for which 12 months were checked, for those assets, 12 months still applicable. Now check the new period of holdings. And based on these period of holdings, if the asset is long-term capital asset, on or after 23rd July 2024, if the capital asset is transferred, you are not going to get any indexation benefit from now onwards. this proviso is being taken away. Proviso allowing you to take indexation benefit is taken away. Getting my point? And now whatever capital gain will be arising. Now see, now in majority of the cases you will get gains only. Earlier what used to happen, if 100 times long term capital gain is calculated, out of 100 only 5 to 10 times the long term capital gain used to get calculated. Earlier what used to happen, out of 100 times only 5 to 10 times the long term capital gain used to be calculated, because majority of the cases it was long term capital loss only due to the indexation benefit. And whatever times the capital gain is calculated, on that they used to charge 20% tax. How much tax rate was there? 20%. 20% tax rate was there, my dear friends. Oh my God. But that was the case when the indexation was available. That was the case when the indexation was available. But now we have reduced, now we have eliminated the indexation. What will happen now? Come on, tell me. Now there will be mostly in every cases, there will be a gain only. Gain. Out of 100 calculations, in 90 to 95 cases minimum gain will be there. Now there are no chances of losses because the cost is not inflated unnecessarily. Even if we are not getting 20% tax on this, no, still it is okay for us. Give us only 12.5%. So they are telling you that, see, we have taken away indexation benefit from you, no? So cost will be reduced without indexation, no? Don't worry. We'll reduce the tax rate, okay? So the tax rate reduced to 12.5%. But the intention for reducing the tax rate to 12.5% was not to give you benefit, because one benefit is taken, indexation is taken. So let us give benefit in tax rate. Even if they are taking 5% tax also, no, then also they are collecting tax on almost all the transactions now. Because now in almost every transaction, what will happen? Gain will only happen, because indexation is taken away. So what you will do now? See, to sum up everything, okay, if capital asset is transferred prior to 23rd July 2024, if capital asset is transferred on or after 23rd July 24. Now in this case, check period of holding 12 months, 24 months and 36 months. This is 2 assets, this is 4 assets, this is all other assets. Yes or no? Do you remember this? What will you do here? Once the period of holding you have checked, and now based on this period of holding, capital asset is short-term capital asset. Or capital asset is long-term capital asset. If the capital asset is short-term capital asset, what are you going to do? Cost of acquisition and cost of improvement. Will you get indexation? No, for short-term capital asset you don't get any indexation. Okay, but if the capital asset is what? It becomes long-term, friends, then are you going to get any indexation? The answer is yes, sir. You are going to get the indexation. Why you are taking indexation, sir? You just now told us that indexation is not available. I told you if the capital asset is transferred on or after 23rd July. See, the transfer is happening. Prior to, what did I say? prior to 23rd July. So check old period of holding. If the capital asset is long term, take the indexation also. And now whatever capital gain will arise, here the short term capital gain will arise. That short term capital gain can be normal also, and that short term capital gain can be 111A also. If it is normal, then taxable at normal rates, and if it is 111A, then it will be taxable at 15% rate. This is a master chart I am giving you. Okay, don't forget all these things, very important. Now if you get short term capital gain, then you are supposed to do this. What if you get short term capital loss? Short term capital loss, you will set off against short term capital gain also and long term capital gain also. Short term gain also, long term gain also. If there is short term capital loss. But if gain is there, no need to worry. Gain will be taxable at either normal rate. Some short term capital gain will be covered in 111A. But other than those short term capital gains, specific type of short term capital gains, all the short term capital gains will be covered in normal rates. Yes or no? Now I'll tell you what type of gain is a short term gain covered by 111A. Wait. Please pay attention. If you are selling listed equity shares, what are you selling? Listed equity shares on a recognized stock exchange by paying what? STT. And the period of holding was less than 12 months. Less than equal to 12 months. Then the resulting gain will be short term only. So that gain is short term gain on listed STT paid listed equity shares. What did I say? Short term gain on STT paid listed equity shares. That short term gain on STT paid listed equity shares, that is covered by 111A. On that 15% tax rate is there. Any other short term capital gain, normal. But only this one capital gain, short term gain, will be covered by 111A. Yes or no? For that we are going to have a detailed discussion later on. Okay. So first of all, did you understand this much? This part did you understand? Now what if the transfer, see, still the transfer is happening prior to 23rd July only. Okay. Now if the asset is long term, what will you do? Sir, I am going to do the same thing, sir. See, but I will be taking the indexation in the cost. Getting my point? Wait. Now the capital gain will be long-term capital gain, and this long-term capital gain is after taking the indexations. Yes or no? Now on this long-term capital gain, will be of two types. Long-term capital gain is of two types. Either it will be covered by section 112 or it will be covered by 112A. If it is 112, then what are you going to do? This will be taxable at 20%. This will be taxable at 20%. Long-term gain covered under section 112, taxable at 20%. And if there is listed equity shares transferred on a recognized stock exchange, hello, by paying STT. So STT paid long-term capital gain on transfer of, on sale of listed equity shares. STT paid short-term gain covered by 111A. STT paid long-term gain covered by 112A. In 112A, up to, what did I say? Up to 1 lakh, no tax. And more than 1 lakh, excess amount, excess amount, the tax rate was 10%. So up to 1 lakh that gain, no tax will be charged. Gain is taxable, but while calculating the tax, remove that 1 lakh rupees. On that 1 lakh, no need to calculate the tax. But any long-term gain over and above 1 lakh, 112A long-term capital gain, yes or no? STT paid long-term gain covered by 112A. If it is more than 1 lakh, so excess over and above 1 lakh was chargeable at what rate? 10%. And if there was loss, if there was long-term capital loss, so any long-term capital loss, set-off was available only against long-term capital gain. It was not allowed not allowed from short-term capital gain. So set-off was allowed only from long-term capital gain and not from short-term capital gain. Getting my point, everyone? Sure, sir. So this was the scene which happened prior to 23rd July, when the capital asset used to get transferred prior to 23rd July. But now, if the capital assets are transferred on or after, what did I say? On or after 23rd July 2024. Now what type of period of holding you will check? Come on, tell me. Will you check the same period of holding? Yes, sir. I am going to check the same period of holding. For two assets, I am going to check what? For two assets, I am going to check 2 months. Sorry, for two assets, I am going to check. I have written this, no? Wait. For two assets, I am going to check 24 months. And for 4 assets, I used to check 12 months. 4 assets, do you remember the name? 4 assets, listed equity shares, units of EOMF, units of UTI and zero coupon. For those 4 assets, I used to check 4 months earlier also. I will be checking 12 months. For those 4 assets, I will be checking 12 months right now also. There is no change. 2 assets, do you remember 2 assets? Unlisted shares and immobile property. I used to check how much? I used to check 24 months only. Now also I will be checking 24 months for those 2 assets. All other assets I used to check how much? 36 months, no? Now instead of 36 months, amendment is there. For them, I will be checking 24 months. This is amendment. Okay. Now I will check this period of holding. And after checking this period of holding, I come to know that the capital asset is what? Capital asset is short-term capital asset, or capital asset is long-term capital asset. Now, if the capital asset is short-term capital asset, cost of acquisition and cost of improvement, will it be indexed? The answer is no. No indexation is available when you calculate what? When you calculate short-term capital gain. But if there was a long-term capital gain, your cost of acquisition and cost of improvement, which you used to index earlier, yes or no, on which you were getting indexation earlier, will no more be available. This is Finance Act 24 amendment. So amendment is here also, one place. Amendment is here also. This is also your amendment. Now, sir, now what will happen? Now, if without taking indexation, you have calculated your short-term gain, this short-term gain, if it was normal, taxable at what rate? Normal rates. But if it is STT paid short-term gain, yes or no, covered by 111A, earlier it was taxable at what rate? 15%. Yes or no? Now here also there is an amendment. This 15% is made what? 20%. So sir, this is also your amendment. Now the rate of short-term gain under 111A has been increased to 20% instead of 15%. Got it? Next one. If you are getting long-term asset and long-term gain you are supposed to calculate. So without indexation, calculate your long-term capital gain. Now that long-term capital gain will be under section 112 or 112A. So 112 capital gain taxable at what rate? 20%. And 112A STT paid long-term gain on transfer of listed equity shares on a recognized stock exchange. Yes or no? That was covered by 112A. Up to 1 lakh, no tax. And excess, how much? At 10%. Yes or no, sir? See, this 20% rate is now reduced to 12.5%. And it was up to 1 lakh, no, now it is up to 1.25 lakhs. And the rate is also increased 12.5%. See how many changes they have brought. So now the LTCG covered by 112, which was earlier taxable at what rate? 20%. Now that same LTCG will be calculated without giving indexation. So your gain will be higher. Hence the government is reducing your tax rate to 12.5%. Sure, sir? Earlier, the long-term capital gain, which was covered under 112A, that was getting taxed only at 10%. But now the tax rate is increased for all the long-term gain. The tax rate is increased to 12%, including the long-term gain covered by 112A. Now the tax rate on this gain will also be 12.5%. But they have increased the limit from 1 lakh to 1.25 lakhs. Got it, sir? Sure. So this is also an amendment over here in the tax rate. This is also an amendment here in this tax rate. See how many amendments are there. The entire chapter is amendment only. Getting it or not? Now what is happening, sir? Now if there was a short-term capital loss, what we used to do earlier? Short-term capital loss, set off against short-term gain, yes. Allowed, yes. Set off against short-term capital gain, short-term capital loss. From both, it is allowed. And if it was long-term capital loss, earlier also it was allowed from long-term gain only. Set off was allowed from long-term capital gain and not from short-term capital gain. So right now also set off is allowed from long-term capital gain and not from short-term capital gain. There is no change in the set off. Okay. There is no change in what? Set off. Set off remains same. Short term against both. Long term only against long term. Short term against both. Long term only against long term. Will you remember this? Shall I move ahead? So the indexation was your benefit, no? That is taken away. So now what you will do? Come on, tell me. If the capital asset is transferred prior to this date and the capital asset is long term, cost of acquisition, cost of improvement will be indexed. If the capital asset is transferred on or after 23rd July and the capital asset is long term, cost of acquisition, cost of improvement will not be indexed anymore. So while calculating the capital gain, please remember, take the indexation of cost of acquisition, cost of improvement only if you see the date of transfer prior to 23rd July. If you see date of transfer on or after 23rd July, then check new period of holding. Based on that, if the capital asset is long term, no need to take any indexation. Indexation benefit is taken away. Will you remember? Sure, sir. Very good, sir. So pay attention. This and this. Read this now. Now you will understand. Answer. In other words, I want to say this. Read this. Okay? Now there is one summary table which I am not discussing right now because you'll hardly understand anything, okay, from the summary table. But let me first finish the entire syllabus. Then I will bring you to that period of holding table also. Do you remember yesterday only we were doing period of holding? What is the meaning of period of holding? Date of acquisition till the date immediately preceding to date of transfer. That is the period of holding. But in some special cases, the period of holding will be starting from this date, ending on this date, or from this date to this date. Okay, we are going to cover all those things in our subsequent discussions. But we are going to see that table in the end. Then this same table, this is given, this is indexation, when available, when not available, when available, when not available. Okay, this entire table that we are going to do in the end of this chapter. Why? Because let me finish all these things first. Once we will be finishing now, then there will be very much clear understanding about what all these things are, because we would have already discussed them at proper places. Correct? So I'm skipping this table as of now and I'm coming to this important note. Very, very, very important discussion. Very important. Okay. Pay attention now. See, if you are a resident individual or HUF, you have transferred any immobile property. Okay, so that immobile property was acquired and now it is what? Transferred. I am doing this discussion only for resident individuals and HUFs. Okay, this entire discussion you will not apply to any other case. This is specific discussion happening in case of what? Resident individual and HUF. So if you are a resident individual or HUF, you have transferred any immobile property. Okay, so this individual or HUF is transferring any immobile property which was acquired by him and transferred by him. Acquired prior to 23rd July 24 and transferred also prior to 23rd July 2024. And now this immobile property is what? Is a long-term capital asset. If it is a long-term capital asset. So, what I am trying to say here, this was a long-term capital asset. And the cost of acquisition while calculating the long-term capital gain, yes or no? The cost of acquisition and cost of improvement, will it be indexed or not? And the capital gain for this will be covered under section 112, will be taxable at what rate? So two things we have to discuss. One, I am giving you one situation. In this situation, whether your cost of acquisition and cost of improvement will be indexed or not. Whatever capital gain will come, long-term capital gain will come, covered by section 112. Okay. on that, what will be the tax rate applicable? Sure, sir. Sure, sir. First situation, please see this properly. See this. If it was transferred and acquired, both happened prior to 1st April. Sorry, both happened prior to 23rd July. So, will you index the cost of acquisition? Tell me yes or no. Will you index the cost of acquisition and improvement? Why? Because the transfer is taking place prior to 23rd July. So, cost of acquisition, cost of improvement, indexation. Index cost of acquisition and improvement I will take. Indexation will happen. And after taking indexation, whatever capital gain you are calculating, that capital gain used to be taxed under section 112 at a higher rate, because we are giving you indexation benefit, no? Hello, sir. So what was the rate? 20%. Tax rate under section 112 will be 20%. Done, sir. First case very easy. You have acquired prior to 23rd July and you have transferred also prior to 23rd July. Indexation in cost was available, and whatever capital gain which you were getting, that capital gain used to be covered by section 112 and used to get taxed at what rate? 20%. Now, coming to this part, acquisition on or after 23rd July 24 and transfer also on or after 2024. Both the things, acquisition also happening on or after 23rd July and transfer also happening on or after 23rd July. Meaning that from now onwards, whatever immobile property will be purchased and they are sold now onwards, yes or no? On those, cost of acquisition and cost of improvement will not be indexed. Without indexation, the capital gain will be calculated. And on that, how much tax rate? Now the tax rate has been reduced, 12.5%. Will you remember this? Easy or not? Now comes a really interesting part. Third part. What if this is the situation? Third case. The asset was acquired prior to, immobile property was acquired prior to 23rd July. And then all of a sudden Nirmala madam did that announcement that no indexation benefit will be available and your tax rate will be 12.5%. Hello, sir. Will you get any indexation? Resident individual HUF transferring immobile property as a long-term capital asset. Whatever long-term capital gain will now be calculated on this immobile property which was acquired prior to 23rd July, but it is transferred on or after 23rd July. Indexation will not be available here also, sir. Because if it is transferred on or after 23rd July, we are not going to give any indexation to anyone, even if you are this assessee. No indexation will be available, no. Compute the capital gain without taking indexation. No indexation benefit will be given. Without indexation benefit, whatever tax was, whatever capital gain was there, pay only 12.5% on that. But wait, in this last case now, we are giving you one option also. Since you are a resident individual or HUF, transferring an immobile property which you acquired prior to 23rd July 2024 and you transferred it on or after 23rd July 24, we are giving you one benefit. But this benefit we are not going to give you at the time of computation. Computation will happen without indexation. And that without indexation, whatever long-term gain you have calculated, that long-term gain will have to be shown in your total income. In your total income computation, whatever capital gain you will compute and show will be without indexation only. Hello, sir. But when you will calculate the tax on that, calculate 12.5% tax or calculate 20% after considering indexation benefit, whichever is more beneficial, pay that tax. Tax calculation at the rate of 12%, 12.5%, but on the capital gain without indexation. But at the time when you will be calculating the tax, no, at that time do one thing, recompute your capital gain by taking indexation benefit. And on that capital gain, calculate 20% tax. Either pay that 20% tax or pay this 12.5%, whichever is more beneficial to you. That benefit of taking the indexation in the cost is not available while computing the capital gain. Yes or no? It will be available only when you are going to calculate your tax liability. So when you will be going to calculate your tax liability, your long-term gain in your total income will be appearing without indexation only. On that you calculate 12.5%. But do one thing, while paying tax, no, while calculating this tax, one more calculation you do, recompute that entire capital gain, recompute once more by taking the indexation, and now on that long-term capital gain, calculate 20%, whichever tax is more beneficial, 12.5% is more beneficial or 20% is more beneficial, pay that tax which is more beneficial to you. But this calculation you will do only at the time of calculating the tax liability. So wait. What will you write here? This is without indexation 12.5%. Or do one thing, take indexation and calculate 20%. Now this 12.5% or 20%, okay, whatever tax you have calculated on this gain at the rate of 12.5%, whatever tax you have calculated on this gain at the rate of 20%, whichever is more beneficial means lower, pay such tax. This benefit is given only at the time of what? Only at the time of calculating the capital gains. Pay that tax. Sure, pay that tax. But when you will making the computation, no, when you will be making the computation, this gain to be shown under the head capital gain in computation of total income. Now what do I want to tell you? If you have written this, no, I'll make you all realize, visualize the things. Pay attention now. Let's calculate total income. You are an individual, resident individual or HUF. Okay. For you, if you want to calculate total income, what you do? You first calculate your salary income. Hello, sir. Then you take your income from house property. Then you take your PGBP income. Then you calculate your capital gain, no? Now in the capital gain, under the capital gain head, okay, compute LTCG on immobile property which was acquired prior to and which was transferred on or after 23rd July 2024. For this immobile property, compute LTCG without indexation only. So compute without indexation and show in the capital gain head. That's it. Here that option is not given. Option to take indexation in the cost is not given. No. If you have transferred on or after 23rd July, nothing doing. Compute without indexation. That's it. Now, have you computed without indexation? Yes. Show that amount in the capital gains. And after capital gains, you will have IFRS also. Now see, you have income of all the 5 heads. Salary head you are having, house property you are having, PGBP you are having. Then now this capital gain head, capital gain you will be having. But in this capital gain, without indexation, the capital gain is calculated and that is shown. Yes or no? Now IFRS you will be having. Now you will add 5 heads. You will add 5 heads of income. You will get GTI, but adding and finding GTI, apply the clubbing provision also, apply the set up and carry forward provision, only then this total will be known as what? Gross total income. Now out of that, chapter 6A deduction you will take. Yes or no? Reduce that chapter 6A deduction. You will get total income. Now can I say, in your total income, this gain is there? In your total income calculation, that entire gain is there, because from there you don't get chapter 6 deduction. So from the LTCG, STCG, etc., no, you don't get chapter 6 deduction. So that entire amount is there in your total income. Now on this total income only you are supposed to calculate what? Tax liability. Understanding? So do one thing, out of your total income, no, split it. On your LTCG, which LTCG, sir? Which was without indexation, this LTCG, yes or no? On the LTCG which was covered under section 112, on your immobile property, which you computed what? Without indexation above, yes or no? Apply what rate? 12.5% and calculate one tax. Now that same capital gain which you calculated and showing in the computation of total income, now you recompute it again. Now you will recompute by taking indexation benefit. So same capital gain you are supposed to once more recalculate. But this recalculation is happening just to know that how much tax is to be paid. That's it. This capital gain will never come in the computation of your total income. There only what will come? Without indexation. I have also mentioned. Please check. So here what you will do? Now the long-term capital gain on immobile property, which was calculated without indexation, on that you applied 12.5%. Now with indexation also you take. And on that you apply 20%. Yes or no? Whichever is more beneficial means whichever is lower. That tax you pay. Now on other total income you are supposed to apply what? Normal rates. If you are shifting out of 115 BSC, but if you are not shifting out, then this will be 115 BSC rates. Getting my point? So this way the calculation will be happening. Okay. But this type of calculation giving this benefit is available only and only you are a resident individual or HUF, and your capital gain is arising on immobile property which was acquired prior to 23rd July and transferred on or after 23rd July. Even if you are a resident individual, resident HUF, for any other asset, without indexation, compute the capital gain. Yes or no? Show it in the calculation. But this option will not be available for other assets. This is available only in the case of immovable properties. So if you are a resident individual, you acquired some jewelry prior to 23rd July and now you are transferring that jewelry on or after 23rd July. So you will compute the capital gains. But now the capital gain which is calculated is not calculated on this immovable property. It is calculated on jewelry. Jewelry was acquired prior to 23rd July? Yes. Transferred on or after 23rd July? Yes. Will you calculate capital gains? Yes. Without indexation. Show this only without indexation and on that calculate 12.5% only. This option will not be given. Even if you are resident individual or HUF. Getting my point? Sure, sir. No, this option is available for subsequent years also. So if you are going to transfer the same immovable property in subsequent years, you are transferring on or after 23rd July only, no? Hello? For example, 2 years. After 2 years, you are going to transfer in 26-27. So you have transferred on or after 23rd July only, no? On or after 23rd July only, no? But that property which you are transferring that time, you had acquired it prior to 23rd July 2024. See, in my case now, I have acquired this residential house in 22-23. My residential house, no, this house I have acquired in 22-23. Meaning that I have acquired prior to 23rd July 24. Now, whenever in future, after 5 years, after 10 years, after 15 years, whenever I am going to transfer this immobile property, no, I will calculate capital gains without indexation. And on that I am supposed to pay 12.5% tax. But I will get an option also at that time. Is that option available only for this year? No. Whenever I will sell on or after 23rd July, yes or no? That time I will get an option. The capital gain which I have computed without indexation, on that I will have to pay 12.5% or again I will have to recompute the capital gains. By taking indexation, on that I will calculate 20%. Whichever is more beneficial, that I will pay. Getting it or not? Sure. So this was an important discussion for your indexation benefit. Just imagine you have started the computation of capital gain. Full value of consideration minus transfer expense, net consideration, cost of acquisition, cost of improvement, you will get capital gain. But this cost of acquisition needs to be indexed if the capital asset is long-term capital asset. That was there in the proviso to section 48. But that proviso is now taken away. Meaning that if the capital asset is transferred on or after 23rd July, any capital asset transferred on or after 23rd July 2024, and if that capital asset is long term, no indexation benefit is available. No indexation benefit available. Compute capital gain compute long term capital gain without taking indexation. But if you are a resident individual or HUF, transferring an immobile property which you acquired prior to 23rd July and you are transferring that on or after 23rd July, you will get an option. Not at the time of computation, at the time of calculating the tax liability. You will get an option. Option to pay tax at the rate of 20% on capital gain with indexation. Or you pay 12.5% on without indexation capital gain, whichever is more beneficial. But your computation will happen without indexation only. That time you are not going to get that option. Will you remember? Please don't commit mistake here. And this is the point which they are going to exploit. And this time also in the examination, they are going to give you one question, at least short question on capital gain. And that question will be for minimum 6 to 8 marks. Guarantee I am telling you. And if that question is there, and if they want to make your life miserable, no. If they want to make the paper a little bit difficult, they are going to exploit such kind of concepts. What will you do in that case? If you don't remember all these things, if you don't practice all such things, you're going to miserably perform in your papers. Are you going to do that? Miserable performance or good performance? Good performance you are supposed to give. No, you are my students. Don't spoil my name in the exams. Okay? Get good marks and tell everyone that Umang sir has taught you DT. Let's move ahead now. So, this important note which I told you, no? This important note only I had discussed. Please read. Not audible, I know, because I'm not speaking anything. Okay. Now, accordingly, long-term gain on transfer of such immovable property shall be computed without indexation, tax 12.4%, with indexation, tax 20%, whichever is more beneficial to the assessee. It must be noted that the benefit of indexation shall be available only while computing the tax liability and not while computing the income under the head capital. And not while computing income under the head capital gain. Thus, for computing what? Income, such LTCG shall be computed without giving any indexation benefit. Done, sir? No. Another proviso to section 48. Whenever you will go and calculate your capital gains, you are supposed to remember few things. Few exceptions are there. First exception I told you, take indexation benefit if capital asset is long term. And there was an amendment. Now second exception, second proviso to section 48 was no STT will be allowed as a deduction while computing the capital gains. So whenever you are calculating capital gains, will you take any deduction for securities transaction tax? No. See, usually you pay securities transaction tax on shares and securities only, no? So this proviso becomes relevant when you transfer a capital asset, and that capital asset is what? Shares and securities. This this proviso will not be applicable for all the assets, because on transfer of and buying and selling of all the assets, you don't pay STT. STT is paid only if the capital asset is your shares or securities. So whenever you buy that shares on the recognized stock exchange, whenever you sell those shares on a recognized stock exchange, at the time of buying and selling both the transactions, you are supposed to pay STT in the stock exchange. If that STT is paid on the buying and selling transactions resulting into PGBP income, then that STT is allowed under PGBP head. Do you remember that? We have already done it. But if the buying and selling transaction does not result into PGBP income, then definitely the buying and selling transaction of shares and securities will result into capital gain income. So whenever you will calculate the capital gain on buying and selling of what? Shares or securities. Because now the shares and securities are not held by you as stock in trade. You are not speculating. Buying and selling transaction is not going to give you PGBP income. Now the buying transaction and selling transaction will give you what? Your capital gain. Because shares and securities are now held by you as your investment. Any STT which you have paid at the time of acquisition, ignore. No need to add to the cost of purchase. Yes or no? No need to add. And any STT which you will pay at the time of sale, ignore that also. No need to consider that as transfer expense. So STT paid on buying will not be added to the cost of acquisition, and STT paid at the time of selling will not be reduced as if it is a transfer expense. Both the time the STT will be ignored. No deduction for STT will be available while computing your capital gains. So if no deduction is available, don't include in the cost. At the time of buying, whatever you have paid, don't include in the cost of acquisition. If you will include in the cost of acquisition, it will be allowed as a deduction. Hello, sir? And if at the time of selling you have paid, don't consider that as your transfer expense. Because if you consider that as your transfer expense, it will be reduced while calculating the capital gains. Yes or no? So in your cost also you are not supposed to add, and in your transfer expense also you are not supposed to show STT. Because buddy, if we have to give the deduction of STT every time when you pay that STT, you are paying at the time of buying and selling under PGB period. That time also we are allowing fully, and right now also we are allowing that deduction. Then why the bloody hell we are taking STT from you? What is the reason for taking that? It was better not to charge only, no? If we had to give you the deduction everywhere. Understanding, sir? So what will you do? Come on, tell me, what will you do? Will you take any deduction of STT while calculating your capital gain? Never take it. It is ignored. So have you paid STT at the time of buying the shares and securities? Yes, don't add in the cost. Ignore at that time. Have you paid STT at the time of selling the shares and securities? Yes. Then also ignore. Don't show it as your transfer expense. Because no deduction for STT is allowed while computing the capital gain. It is given in another proviso to section 48. Will you remember this? So two things. What I have told you. Given under which section? 48, no? Tell me. What will you take? Any type of capital gain you are calculating, section 48 says how to compute. What will you take? Full form. Full value of consideration. Done, sir? Then out of this, will you reduce transfer expense? Yes, sir. What will you get? Net consideration. What will you reduce? Cost of acquisition and cost of improvement. What will you get? Capital gain. You will get capital gain. This is the section 48 main provision. Wait. One proviso we saw, that no deduction for STT will be allowed while calculating the capital gain. Meaning that STT paid on buying or selling of capital asset being what? Shares or securities, transfer expense, cost of acquisition, don't show here also, don't show here also. Summary. Now cost of acquisition and cost of improvement, both indexation is granted if capital asset is long-term capital asset. It is granted. But here also an amendment has come that indexation not granted even if capital asset is long-term capital asset, if it is, even if long-term capital asset on or after 23rd July 2024. Meaning that indexation will be granted if transfer is taking place prior to 23rd July. Yes or no? So, here what you will write? Prior to 23rd July 24. Now, here also there is one change, that in case of resident individual or HAF who is transferring immobile property A for acquired prior to what? 23rd July 24 and transferred on or after 23rd July in this case. This is a special case, no friend? This is a special case. In this case, COA and COI, no indexation at the time of computation, but at the time of tax computation, (12.5% on LTCG without indexation, 20% on LTCG with indexation, whichever is lower, that tax you pay. Sure, sir. Full and final. Please don't forget this. Now pay attention. Do you have this format with you? Can you see this format? One by one we are going to discuss all these items. Because in this entire chapter, no, your answer will be calculated like this only. But what amount from the question you will take as full value of consideration? Identification of these amounts from the question, very important. If you fail to identify these amounts properly and correctly, no, then there is no scope that you are going to get a single mark in the exam. It's already 6 lines you are getting your answer, and that too also, in that also you want step markings. Step markings are, logical if the answers are long, very long. And here only 6 lines are there, and out of those 6 lines you have to identify 1, 2, 3 and 4 amounts correctly. 2 are just totaling. 4 amounts you have to identify properly, and you have to see whether indexation will be happening or not happening. There also you are saying, there also you are committing mistake and saying that you should be awarded marks on what? Step basis. Correct steps are done, I should be given marks. Forget about it. So identification will happen, proper identification will happen only if you understand each and everything properly. Yes or no? So we are going to discuss these things one by one. What is FVC? What is transfer expense? What is cost of acquisition? What is cost of improvement? Yes or no? So first thing, let's discuss about full value of consideration. As the name suggests, full value. We are supposed to take full value. Full means whole amount of the consideration which we are going to get as a result of what? Transfer of your capital asset. So if you are transferring the capital asset, you are a transferor. So on the transfer of your capital asset, whatever consideration which is promised to you, hello sir, which you are supposed to get as a result of the transfer, the full value of that consideration, whether you have received it or it is still receivable, will not make any difference. That full amount of your consideration will be treated as your full value of consideration. So you have sold your asset, for example, for 20 lakhs. So can I say the consideration for transfer of your capital asset is 20 lakhs? Hello, take that full value as your full value of consideration. Out of that 20, 15 lakhs you have received right now, and balance 15 you are going to receive in 2 installments of 2.5 each. Yes or no? So at the time when you will actually receive them, that time you are not supposed to pay any tax. Getting my point? Because you are showing that 2.5, 5 lakhs which is still receivable, you are showing that as a part of your full value of consideration right now only. So the year in which the capital asset is transferred, that is the year of taxability of capital gain. In that year, take the full value of your consideration. Full value of consideration. Whether you have actually received or it is still receivable. Take the entire amount as your consideration to calculate your capital gain. Now, have you taken the 15 lakhs also? The amount which you have received? Have you taken the balance 5 lakhs which is yet to be receivable? Yes or no? If you have taken this 5 lakhs also as a part of this consideration, because you are supposed to take the full value of consideration, this 5 lakhs is already suffered tax right now. No. Now, whenever you are going to receive it in future, at that time you are again going to pay tax on that. No need to pay tax on that. Again, ignore at that time. Because it is already considered as your full value of consideration right now. As a part of your full value of consideration. Getting my point? Everyone. So, entire 20 lakhs shall be taken as full value of consideration. Can you get consideration entirely in cash? Yes, then there is no problem. The sale consideration entirely in cash I was getting now. In cash means monetary consideration. Yes or no? So whatever monetary consideration you are getting, money. Monetary consideration, full amount of that you are supposed to take, whether you have received or it is still receivable. But sometimes it is possible that the consideration for transferring your capital asset, you are not receiving in money terms, you are receiving in the form of other asset. For example, this is my asset, capital asset. Let us assume it is a capital. Though it is not a capital asset, personal movable personal item. Hello, movable personal effect. Is it a movable personal effect? No. It is my capital asset only, used in my business. While teaching you, I am using it as an equipment. But let's say I'm a student, okay. This is my personal effect. So this is not a capital asset only. I know this is not a capital. Let us assume that it is jewelry. Let us assume that this is jewelry. See how I have hidden the buttons. Buttons are this side. This is my jewelry, black color jewelry. Okay. This is my capital asset. I'm giving you jewelry. I'm selling you jewelry and taking money from you. Transfer. Consideration is coming in money. Full amount of this consideration I have to take. Yes or no? But what if I'm giving you my jewelry and against that you are giving me land? Other asset can you give me? Take my jewelry and give me your shares. Take my jewelry and give me any other asset. Give me diamonds. Possible or not? So have I transferred my capital asset? Yes. But by transferring my capital asset, am I getting any monetary consideration? No. I am getting some asset. But don't you think that asset is only the consideration for transferring this asset? I am transferring this asset for what consideration? In return of an asset only, no? So that asset which is coming to me, the asset which is received by me is my consideration for transferring my capital asset. Whatever will be the value of that asset coming to me, fair market value of that asset which is received by me, yes or no? Fair market value of that asset as on the date of transfer of my asset. So as on the date on which I am transferring you my asset, as on this date, whatever asset I am getting from you, hello, what is the fair market value of this asset as on the transfer of my capital asset? That will be my full value of consideration for transfer of my capital asset. And wait, don't you think that this is a classic case of exchange of capital assets? I have given you my capital asset. So my capital gain will be calculated for this asset. I am transferring this asset. But are you giving me this asset? So for me, it will be my full value of consideration. This value of this will be my full value of consideration. Yes or no? But now think from your side. Think from your side. Are you transferring your asset to me? For what consideration? So your capital gain will be calculated for this asset. Hello? Because you are a transfer of this asset. Against this, what consideration you are getting? This, no. The fair market value of this asset will be taken as your full value of consideration. On the basis of that, you are going to calculate capital gain for this asset. Hello, sir. Did you understand the full value of consideration? If received in money, monetary consideration, full amount of that monetary consideration. If received in cash, then full fair market value of the asset coming to me for transferring my asset will be my full value of consideration. Okay? But sometimes no. I am transferring you my asset. You are giving me 10 lakh rupees. Plus, you are giving me this asset also. So what will be my full value of consideration? It will be money plus other asset coming. That is my full value of consideration. Getting my point, sir? Everyone, read this example. Example, and that after example, whatever I have written below that, please read this part fast. The same thing I have explained right now. Okay, no? Now color, pink color. Read what this is. And this is very important now. Very important. Sometimes no. In some special cases no. Which we are going to learn in subsequent parts of this chapter. A notional amount will be told. That if you want to calculate capital gain in such situation, this amount will only be taken as your full value of consideration and no other amount can be taken. So if the law tells you to take a specific amount as a full value of consideration, then your capital gain in that situation will be calculated by taking that full value of consideration only, and you cannot take any other amount. So sometimes I cannot find out my full value of consideration like this. And even if I'll show my full value of consideration like this, no, my answer will be wrong. This I have to follow every time. But in certain special cases to be discussed later on, in those cases it will be told that in this case capital gain will be calculated by taking this amount only as FVC. Please take that amount only as your full value of consideration and no other amount will be taken. Hello sir, not even this, you cannot take this also. You'll have to take that amount only which is specifically mentioned to be taken as what? Full value of consideration. Sir, what are those cases? In those cases, what amount I will take as full value of consideration? That we are going to discuss. No, why are you worrying right now? Understand the basics, then special aspects, then specific charge. So in specific charge, in special aspects, you will come across to these things. Those are the things which you are supposed to start. Hello sir, will you remember this? Should I move ahead? Okay, FVC done. What is full value of consideration in the computation, in this calculation? No friends, calculation which we were making. What is full value of consideration? I have already explained. Sometimes a notional amount can also be taken here as full value of consideration. Yes or no? Okay. Now, what is the second part? Transfer expense. Now, come on, you all tell me what is transfer expense. What do you understand by this term? Give me answers properly. Give me answers fast. Okay. Registration charges, stamp duty. Only this much. Oh, brokerage fee. Very good, very good. Underwriting. How come underwriting? No. Underwriting does not come here. In what type of asset underwriting will come? Document writing, meaning legal charges, etc. Okay, legal charges. Correct. Perfect. No, you know what are transfer expenses. Meaning that, see, if I am an assessee transferring my asset. So for the purpose of transfer of my asset, whatever expenses I am incurring, which are wholly and exclusively connected with transfer of my capital asset. So all such expenses I am incurring because I am making this transfer. If I would not be making this transfer, I would not have incurred these expenses. Wholly and exclusively incurred in connection with the transfer. Or if I am incurring these type of expenses, no, only then I am able to do the transfer. Meaning without this expense, I cannot transfer. To transfer my capital asset, I have to incur these type of expenses. Wholly and exclusively in connection with transfer. So if any type of expenditure the transferor has incurred in connection with transfer of capital asset, wholly and exclusively in connection with transfer of my capital asset, then that expense will be my transfer expense. When to incur? Before transferring the asset, on the date of transferring of asset, or after the asset is transferred. When to incur? Any time, will not make any difference. The only requirement is you have to prove whether the expense is in connection, wholly and exclusively in connection with transfer of your capital asset. Yes. If this is proved, no, whenever you have incurred that expense, before the date of transfer, on the date of transfer, after the date of transfer, will not make any difference. It will be treated as transfer expense only. Examples are brokerage, commission, stamp duty charges, registration charges, legal charges for drafting those sale deeds, etc. Okay. So these are a few examples. Now tell me, in the question, they are telling you that assessee has transferred his immovable property to some Mr. X. Who is transferring? Assessee. To whom transferred? Mr. X it is transferred. Assessee is a transferor. Has the assessee incurred any of these expenses like brokerage, commission, stamp duty, registration charges, blah blah blah? Yes. Then these expenses which are incurred by the assessee will be treated as his transfer expense. Getting my point? What if the same expenses are incurred by the buyer? He can also incur, no, at the time when I will be transferring. Even he will have to pay brokerage, commission, etc. Even some part of the stamp duty and registration charges, even he will bear. It will be his cost and not my. I cannot say that it is my transfer expense. If I say that the expenses which he is incurring in the form of what? Brokerage, commission, stamp duty, registration, etc., legal charges, etc. If I say that it is my transfer expense, it is as good as calling someone else's wife as my wife, no? It is not good. My wife, only my wife. Someone else's wife is his wife. My expense, my expense. Someone else's expense is his expense. My expense as a transferor, if these type of expenses I incur, only then in the calculation of capital gain, it will be allowed as deduction as my transfer expense. If the same type of expenses incurred at the time of transfer by the transferee, that is the person to whom I am transferring the asset, is his cost of acquisition of the asset, will be added to the cost of his asset. Cannot be treated as my transfer expense. See, under the head salary, no, you are an employee. You used to think as if you are an employee. Under the house property head, no, you are the owner of a house property. You used to become the owner of the house property and you used to think. Under the PGBP head, you are a businessman or a professional. Under this head, no, you are a transferor, transferring your capital asset. Two parties are there, no, the person who is transferring, transferor. The person to whom the asset is transferred is a transferee. Don't become a transferee, become a transferor. You are transferring the capital asset and think from that point of view, because this head is made to tax the incomes of the assessee who is transferring the asset. Transferor. Become a transferor and then think how much FEC you are going to take, full value of consideration, how much amount you are spending for transferring the asset. That becomes a transfer expense. Plus minus what you will get? You will get net consideration. Sir, you will get net consideration. Only plus minus is to be done. Now from net consideration, what are you supposed to reduce? Cost of acquisition and cost of improvement. Now this discussion is really very important. So far understanding everything? Sure, no? Okay. See now. This is section 55. It has two parts. Subsection 1, which will talk about cost of improvement, and subsection 2, which will talk about one, two, three, 4. Clause A, clause AA, clause AC, clause B. 55(2)A. 55(2)A will talk about cost of acquisition. AA will also talk about cost of acquisition. AC will talk also about cost of acquisition. And B we'll talk about cost of acquisition. Wow, sir. Wow, wonderful, wonderful, sir, wonderful. Everywhere cost of acquisition only. Cost of acquisition of intangibles. Intangible assets. Cost of acquisition of shares which you have acquired. Bonus shares which you get on the basis of these shares, and on the basis of these shares you will get right also. Right to acquire what? Right shares. Getting my point? So for these assets, what cost you will take? Whenever you are transferring any of these type of assets, you are an assessee. Are these assets your capital assets? Yes. So in future, you can transfer these capital assets. So to calculate the capital gains of these capital assets, what will be the cost of these assets which you are supposed to reduce? Yes or no? We will have to define. We will define it. Then actual cost in this case, cost of acquisition in case of long term capital asset only being STT paid listed equity shares whose long term capital gain to be computed under section 112A only for this specific asset, 55 to AC is given. 55 to AC will tell you what cost of acquisition you will take for these type of assets, these type of long-term capital asset whose long-term gain you are supposed to calculate under 112A. Getting my point? Hello sir, hello sir, hello. And the cost of acquisition option to take fair market value as on 1 option to take the fair market value as on 1st April 2001. You can take this fair market value as your cost of acquisition. Only if capital asset is acquired prior to 1st April 2001. And see, 55(2)(b, the option as above available for all capital assets except those given under section 55(2)(a, meaning that this option can be taken for 55(2)(a). Yes. Can this option be taken for 55(2)(ac)? Yes. Can this option be taken for all other assets? Yes. But this option which is given in 55.2b is not available in the case of 55.2a assets. There you cannot apply this option. Now wait, no. Why are we in so much hurry? We have all the time. Don't worry. We have to understand this thing properly. If we understand, no, there will be no difficulty at all. They are talking about intangible assets in A. Double A, they are talking about shares. Shares, bonus shares, right shares, etc. Yes or no? In AC, they are talking about, in 55.2 AC, specific asset. See, first also specific asset, second also specific type of asset, third also specific type of asset. And then all of a sudden they are giving option. Don't you think I can have any other asset also? What if I am having jewelry? Jewelry is my capital asset, no? What cost I will take? Is it specifically defined? No, na? What if I am selling, for example, paintings, etc., drawings, etc. They are also my capital asset. Is it mentioned anywhere? What if I am transferring my immobile property? Is it mentioned anywhere? So for all the capital asset, the period of holding is actual cost only. Sorry, their cost of acquisition is actual cost only. But for these assets, we will define. You have to take that. Intangibles, we will tell you, take this. These shares, we will tell you, take this. Listed equity shares, STT paid, capital gain, hello, which is to be calculated under 112A, long-term gain. For that, whatever listed equity shares will be there, 55.2AC, we will tell you, take that. All other assets, take actual cost only, no? So normally, what is cost of acquisition? Are you a transferor? Tell me yes. Are you a transferor? Yes. Transferring any capital asset? Yes. And if that capital asset is a capital asset which is not A, which is not double A, which is not AC, then it is any other capital asset. So can I say any capital asset which is other than covered under section 55.2A, double A, AC. Any capital asset, okay? Any. Few examples. Immobile property, yes sir. Jewelry, yes sir. Then paintings or drawings, yes sir. Artwork, etc., yes sir, etc. All the assets will now be covered here, okay, no? For them, we are not supposed to tell you that what cost should be taken. That you must be knowing that at how much cost you acquired them. So the cost which was actually incurred to acquire them, their actual cost. Hello. We are not supposed to specify. We are not supposed to specifically tell you that at what cost you acquired it. You must be knowing that at what cost you acquired. Hello sir. Actual cost of that asset. That you take as cost of acquisition, no? Getting my point, what I am trying to tell you. If the asset is not covered under A, not covered under double A, not covered under AC, then definitely it is going to get covered over here only, no? Here, residuary part. Examples also I have taken. So for all these assets, their cost of acquisition will be their actual cost only. Actual cost means PP plus PRE. Sir, what is PP? Purchase price. What is PRE? Purchase related expense. So when you are purchasing, when you are acquiring that asset, today you are transferring that asset, but someday in the past, at the time when you acquired that asset, at that time, how much cost you incurred to acquire that asset? Are you a transferor? Come on, tell me. Are you a transferor? Are you transferring any capital asset right now? So right now you are transferring, macha. Right now you are transferring the capital asset. Right now. But that asset you also acquired, no? In the past. So at what cost you acquired? Actual cost. That actual cost is the cost of acquisition of that asset. That you reduce. Only then you are going to get profit and gain, no? Which is chargeable under the head capital gain. Or are you going to charge the entire consideration? To earn that consideration, you had to acquire that asset also, no? So at that time, how much you incurred as a cost to acquire the asset? The purchase price which you gave to the seller at that time. Hello? Plus purchase related expenses which you had incurred. Add all of them. Add all of them. You will get actual cost of your asset. So when you acquired the asset, at that time, what was the actual cost of that asset to you? That actual cost will be taken as your cost of acquisition. Simple. But for intangibles, we will tell you. For shares, etc., we will tell you. For listed equity shares, whose capital gain is to be computed under 112A, we will tell you. But for other assets, you can take actual cost only, no? Understanding? Hello, sir. Now in 55(2)(b), we are giving you one option. Option either to take the cost which we are telling you or to take the actual cost as your cost of acquisition. Or we are giving you an option to take the fair market value also of the asset. We are telling you, we are giving you an option to take fair market value as on 1st April 2001 as your cost of acquisition. So either you take the actual cost as your cost of acquisition or you take fair market value as on 1st April 2001. Whichever you want to take, you can take as your cost. But this you can get, this option you can get only if you acquired the asset prior to 1st April 2001. And by the way, this option is available for all asset except 55(2)(a). So can I say option B available? Yes. Option B available? Yes. Option, oh, this is itself, this is B itself. For this also option B available? Yes. But in the first, no, here, whatever cost we are telling you to take that only. Here you will not get option B. Now what do I want to tell you now? See, I will again give a super summary of this also. What will be the cost of intangibles? I will tell you, don't worry. Cost of intangibles we are supposed to learn. Okay. What will be the cost of shares? I will tell you, no. Why are you worrying? What will be the cost of that listed equity shares whose capital gain is to be computed under 112, long-term gain? I'll tell you, don't worry. But right now remember, for all the assets, what is the actual cost? Come on, tell me. If I talk about any capital asset other than 55(2)(a, double A, AC. Other than these, any capital asset being an immovable property or being any other capital asset. Please be very careful, huh? Which was acquired. Which was acquired prior to 1/4/2001 on or after 1/4/2001. Okay, tell me, if you have any asset which you acquire prior to 1st April 2001, then you get that option of 55(2)(b. Yes or no? But what if you acquire on or after 1st April 2001? Will you get that option? No. In that case, take the actual cost only. So if the asset is any asset, if the asset is any asset, what will be the cost of acquisition, sir? Actual cost. Will you remember this much? What will be the cost? Actual cost will be the cost of acquisition, sir. But if the asset was acquired prior to 1st April 2001, no. Then you get the option to take fair market value as on 1st April 2001 as what? Cost of acquisition. Otherwise, actual cost only is what? Cost of acquisition. So can I say actual cost will be taken as cost of acquisition in all the cases where the capital asset was acquired on or after 1st April 2001. So you acquired one asset in 2018-19 at a cost of rupees 1 lakh. What will be actual cost? 1 lakh. Will you get the option to take fair market value as on 1st April 2001? No. Because you acquired the asset in 18-19, meaning that on or after 1st April 2001. Hello, sir. One asset you acquired in 2004-5, 2004-2005 at 5 lakh rupees. What was the actual cost? 5 lakhs. Take that 5 lakh only as cost of acquisition of that asset. You will not get the option to take fair market value as on 1st April 2001 as its cost. Why? Why you will not get it? Because the asset was not acquired prior to 1st April 2001. It was acquired in 2004-5, which is on or after 1st April 2001 only, no? Hello, sir. So any asset, if it is acquired prior to 1st April 2001, no, only then you get that option. Otherwise, always take actual cost only as cost of acquisition, no? So tell me, in the extreme right, if any capital asset is there, which I am acquiring on or after 1st April 2001, on or after 1st April 2001, will I get the option to take cost as fair market value? No. So what cost I will take? Actual cost only I will take as cost of acquisition. Hello, sir. So here, actual cost will be taken as my cost of acquisition. Done, sir? But if that asset was acquired prior to 1st April 2001, no, then I will get the option take actual cost or take fair market value as on 1st April 2001. Whichever I want to take. Which one I would like to take? Come on, tell me. Which one I would like to take? Would I like to take actual cost or I would like to take fair market value? Sir, whichever is higher. Actual cost is higher, I will take actual cost. FMV is higher, I will take FMV. They are giving me option, no, so I will definitely choose that option which is more beneficial to me. Taking cost will be more beneficial if the amount of cost is more than fair market value. So for example, if the asset was acquired in 93-94, meaning prior to 1st April 2001, and I acquired the actual cost of that asset was rupees 1 lakh. Now don't you think that asset, capital asset, has a unique feature? It has a very unique feature that over a period of time, no, its value will keep on increasing. Hello? So don't you think that the asset whose cost was in 93-94, its cost was rupees 1 lakh, over a period of time, when the time will pass on, its value will increase? No, it will keep on increasing. No. So till 1st April 2021, now from here till here, will the value come down, or it would have gone, it would have grown? In majority of the cases, 99% of the cases, it would have grown only. No. Bloody, you acquired some land in 93-94 for 1 lakh. That land, the value of that land would have grown, no, by 2001, 1st April 2001. So definitely your value is supposed to grow over a period of time whenever you will move ahead. So right now, whatever is the fair market value, in majority of the cases, almost 99% cases, this will be higher only. But in some, unfortunate scenarios, it can be low. Unfortunately, it can be low. So in that unfortunate event, if it is low, don't take it. Take your actual cost only, no? But that unfortunate event will be very unfortunate, very rare. In majority of the cases, almost 99% cases, this amount which you are going to say that it is a fair market value, this amount will be always higher than that actual cost. So can I say actual cost was 1,50,000? Possible. The asset which I acquired for 1 lakh, now on 1st of April 2001, its value became how much? Its value became 1,50,000. Wow, wonderful, sir. So amazing. They are giving you the option to take this fair market value as cost, because you acquired the asset prior to 1st April 2001 in 93-94. So now tell me, if this option is given, you can take your actual cost also as cost of acquisition. You can take this fair market value as also your cost of acquisition. Which one would you like to take? Definitely the higher amount out of these two, no? Because higher the cost, lower the capital gain, lower the capital gain, lower the tax. So this or this, whichever is higher. This or this, whichever is higher, will be the cost of acquisition. But this you can do only if the capital asset was acquired prior to 1st April 2001. 55(2)(b) gives you that option to take that fair market value only if the capital asset was acquired prior to 1st April 2001. Hello, sir. Understanding? So what I will do now? I will delete this. No, I will cut this. What should I write here? Come on, tell me. Can I write this actual cost? Same to same. Duplicate. Can I take this as my cost? Yes, sir. Now, this or fair market value as on 1st April 2001. This is A, this is B. Whichever is lower, no sir, lower. Whichever is more beneficial is higher. And the higher amount will be taken as cost of acquisition. They are directly not saying higher, huh? They are saying option you have the option, whatever you want. So definitely, if in some unfortunate situation the cost would have been higher and the fair market value would have gone less, it might happen in the case of shares. Okay, it might happen in the case of what? Shares. So they are not directly telling you take the fair market value only. They are telling we are giving you option. If you want, you can take the fair market value. If it is higher, take that only. No, we want you to take the higher amount only. But sometimes the fair market value will be lower as compared to the cost. So you should not be stuck, no. If we are telling you take only the fair market value, you should not stuck. You should not feel that okay, see how bad our government is. They are telling us to take the fair market value, whereas I had acquired the asset for more amount. So I should have taken that amount, actual cost, as my cost of acquisition, no? If that was more as compared to the fair market value. Hence they are giving you option. Do whatever you want. But in all the cases it will be higher amount, and we want you only to take higher amount as your cost. We want to give you that benefit. Getting my point, sir? Everyone, sir? Copy, paste. My favorite job. You all know this. Copy, paste. For all the asset this is done. So for immobile property also this is same thing will be done. But there will be a little change. See what change will be there, I will tell you. So first of all, this will be resized so that I can accommodate everything over here. Okay, duplicate immovable property. So okay, sir. So are you an SSE? Yes, sir. Do you have any immobile property? Yes, sir. And that immobile property was acquired? Yes, sir. When it was acquired, sir? It was acquired on or after 1st April 2001 also, and it can be acquired prior to 1st April 2001 also, sir. See, here no, here there will be no change. It will be same. If you acquire immobile property or any asset other than immobile property, if you have acquired that asset on or after 1st April 2001, you are going to take the actual cost only. You will not get that option. Option will be available only if the asset was acquired prior to 1st April 2001. Getting my point? But what if that asset is immobile property which was acquired by you prior to 1st April 2001? Will you still get that option? Will you still get that option now? In case of immobile property, will you get that option? Option is available for all the assets except A. Except A. For all the assets, option is available. Here also it is available for all the assets, including immobile property. It is available. So can I say for immobile property also I can take this fair market value? But they are saying that in case of immobile property which was acquired prior to 1st April 2001, we are going to give you the option to take the fair market value as what cost. Getting my point? But no, but sir, what will happen? No, over here, please remember, please friends, please remember your fair market value. No, your fair market value cannot exceed the amount of stamp duty value as on 1st April 2001 if available. That's it. We will allow you to take the stamp duty, we will allow you to take the fair market value in case of immobile property also. If the immobile property was acquired prior to 1st April 2001, can you take the fair market value as on 1st April 2001? Yes, you can take. But remember that fair market value which you are taking for the immobile property should not be more than its stamp duty value as on 1st April 2001 if available. So in B point, what you are supposed to do, in B point, either you are going to take what? Either you are going to take FMV or you are going to take stamp duty value, whichever is lower. This lower amount will be your B amount. This lower amount will be your B amount. Yes or no? A amount is actual cost. B amount will be lower of these two. And then A or B, whichever is higher, will be taken as your cost of acquisition. Done, sir. For all the assets, the cost of acquisition needs to be determined in this manner. What will be the cost, sir? It will be actual cost. For immobile property also? Yes, sir. For other assets also, yes sir. We are talking about all those assets which are not covered by A, not covered by AA, not covered by AC. We're talking about all those assets. Yes sir. Now tell me, if you will take actual cost is to be taken, but will you get the option to take fair market value as on 1st April 2001? Yes. But that option to take fair market value given by 55(2)(b) will be available only if the assets were acquired prior to 1st April 2001. So are you acquiring your immobile property or any other asset prior to 1st April 2001? Yes. So for those assets, you can take the cost of acquisition as actual cost also. You can take the fair market value as on 1st April 2001 as cost also. You can take that fair market value for all assets. But in the case of immobile property, which was acquired prior to 1st April 2001, you can have the option to take fair market value as cost. But that fair market value cannot be more than stamp duty value of that property as on 1st April 2001 if available. So I took one example, if you remember. What example I took? See, this example I took. Again copy paste, same example. This example I took. What was my actual cost? Come on, tell me. 1 lakh. And what was the fair market value? 1,50,000. So this is A, this is B. This is A and this is B. A or B, whichever is higher. For all assets I'll be doing. But wait, if this was immobile property which was acquired in 93-94. Immobile property acquired in 93-94 means immobile property acquired prior to 1st April 2001. What was the actual cost? 1 lakh. Can you take this fair market value? Yes, you can take. But remember, this fair market value cannot be more than stamp duty value as on 1st April 2001. So this is your fair market value as on 1st April 2001. Do you have the stamp duty value as on 1st April 2001? If the amount is not given, take the fair market value only, because stamp duty value is not available. Hello? But if the stamp duty value is available, compare that stamp duty value also. And stamp duty value was 1,20,000. Ayyo. Now if you will take 1,20,000 fair market value, you are gone. Because now your fair market value exceeds the amount of stamp duty value as on 1st April 2001. Your fair market value cannot exceed that stamp duty value. So will you take 1,50,000 or you will take 1,20,000 only? You will take 1,20,000. Meaning the fair market value, we are allowing you the option to take the fair market value. But take the fair market value only to the extent of stamp duty value. Not more than that. Getting my point? Hello sir. Not more than that. Now tell me one thing. What if the stamp duty value was 1,70,000? Now can you take your entire fair market value? Yes. You can take the entire fair market value of 150 as your cost because it does not exceed your stamp duty value. This will be just for the purpose of what? Keeping a check. It is for keeping a check that you are not unnecessarily taking higher fair market value in the case of immobile properties. Yes or no? So if you are taking a fair market value which is higher than this amount, then the fair market value which is over and above this amount now will be ignored. Only to the extent of this amount the fair market value can be taken as cost. What if this amount is higher, already very, very high as compared to the fair market value? Then the fair market value you can take fully, no? Because it does not exceed the benchmark amount. Hello, sir. Getting my point, sir? So what will you do? A or B, whichever is higher. A or B, whichever is higher. But in B, what amount will come? B, fair market value or stamp duty value, whichever is lower. Done, sir? In our case, what is lower? Here. 1,50,000. In the earlier example, it was 1,20,000. So will you take 150 or you will have to take fair market value to the extent of 120 only? To the extent of 120. Take 120 or 1 lakh, whichever is higher. 1,20,000 you can take, but you cannot take 1,50,000 as cost now. And if this amount is not available only now, you are free to take the fair market value. If available, you will have to restrict your fair market value to the extent of stamp duty value. And this you are going to do for all the assets, all assets, all assets. Only immobile properties which are acquired prior to 1st April 2001, for that you are going to do it. But for all the other assets, you will never have this stamp duty value. For them, you take the fair market value only. Hello, sir. Got it, sir. Should I move ahead, sir? Wonderful. If any doubt till here, then you are free to ask. Should I move ahead? What we are exactly doing, I have made this chart. This is a master chart for cost of acquisition. Okay. Now pay attention. I have first explained this part to you. This part I have explained. But I have also connected this part. And I have discussed this. Getting my point? Now what I am going to do, one by one, I will pick this. Then the discussion will be over. Then this will be connected with 55 2B. Then I will take the second part, 55 to AA. Then I will connect it with 55 2B. Getting my point? And likewise, we are supposed to complete everything. And whenever I'm going to teach you 55 2AC, I'm not going to teach you right now. That we are going to do in tax rates. When I'll be teaching you long-term capital gain 112A, how to calculate, what will be the tax rates, that time I will teach you 55 2AC over there. So that time I will take the cost of acquisition 55 2AC there, and I will connect this 55 2B option there only. But right now, did you understand this cost and 55 2B together? Now next one will be 55 2A and the option which is not available in the case of these assets. Then we are going to do 55 to AA shares and the 55 2B along with that. So right now this is the first thing which we have yet covered. Okay, no? Wait. Now pay attention. This is any capital asset other than 55 to AA and AC along with the precept of 55 to B along with the concept I have already merged. Okay. Now the next part is 55 to B. Sorry, 55 to A. This talks about intangibles, intangible assets. Okay. Now how to determine the cost of acquisition of intangible assets? See, these assets can either be self-generated. First of all, let me write down the names of these intangible assets. Okay, now see, intangible assets can be 1. Goodwill of business or profession. 2. Trademark or brand name of any business or profession. Now this third point was not there earlier. Last year amendment came. 2 years back amendment came and they have introduced this third point. Any other intangible asset. So earlier only these two specific intangible assets were covered. Now all other intangibles are covered here only. Next one, fourth, right to manufacture, produce or process any article or thing. Fifth was right to carry on any business or profession. Sixth was tenancy rights. Seventh, stage carriage permits. Eighth one, Lumars. These few assets were there, and then the ninth point they introduced any other right. That is also covered now. See the same assets now I have given here in your notes also. Okay, see goodwill of business profession, the same thing I am writing over there. Okay, no, see these are the assets. Now if these assets are there, so possibility that these assets can be self-generated also, and they can be purchased also. When you are transferring these assets, for you they are capital assets, but you acquired them or you self-generated them will decide that what should be its cost. So if you self-generated them, then your cost of acquisition of these assets will be nil, will be taken as nil, because you self-generated, no? Automatically it got generated. Goodwill of the business, doing business since so many years, goodwill automatically generated. I am selling my product with a particular brand name automatically generated. Hello? I am selling my product or my goods or my services with a particular logo, trademark. Trademark means a logo. See, Apple phones are there. Yeah. This is Apple phone. Can you see this Apple sign over there? This is what? This is your trademark. Trademark. I'm not showing off, okay? But I wanted to show you immediately. I recollected this. Now, can I say this remote control is there? Can you see Godrej written on it? Godrej. This is a trademark. Along with it, it is a brand name also. Sometimes you say one tick is there on your shoes. That is Nike. Shoes with a tick, we immediately recollect that it is a Nike shoes. Yes or no? So there are certain logos which we see, immediately we know that these logos represent this particular product, represent this particular company. Brand names. Like if you want to do photocopy, you will never go to photocopy shop and tell him, you will never tell him do photocopy. You will tell him do the Xerox. Xerox is the brand name of a company which manufactured photocopy machines for the first time. Now since then every photocopy machine is known by the name of Xerox only. And even the photocopies itself are known as Xerox. Getting my point? Toothpaste. At my house, my mother never calls toothpaste or toothpaste. She calls it Colgate. She was giving me the list of items to be brought from D-Mart few days back. She told me, bring Pepsodent wala toothpaste, huh? Pepsodent wala toothpaste means what? She wanted Pepsodent wala Colgate. She told me Pepsodent wala Colgate. I said Pepsodent wala Colgate means what? Either I'll bring Colgate or I'll bring Pepsodent. She said that toothpaste. She calls it by the name of Colgate only. If you want to buy mineral water, you will never tell that shopkeeper to give you mineral water. You will always say Bisleri. Bisleri is a brand name. So whenever you start selling your goods or your products or your services with a specific name, that name becomes so famous. That is a brand name now. Whenever you start selling your goods or services with a specific logo, that trademark becomes so famous. Meaning that this trademark or brand name is now your property, your intangible asset. Now on all your products, you only can use it. You might have registered those names and logos on your name so that you can only commercially use. You can use them on your products and services. You took the patent. You got it registered on your name. You took the registration from the IPR authorities. Yes or no? Now, if you registered those things on your name, meaning that it belongs to you. But did you go and buy them from anywhere or it automatically generated? Now you are for example, you are a Bisleri company. So you must have taken the registration for the brand name Bisleri on your name, no? Now any mineral water company cannot sell their mineral water on the name of Bisleri. You can sue that company. Hello? If they want to use the name of Bisleri on their mineral water, they will have to come and buy the Bisleri brand name from you. How much will you charge for your Bisleri brand name? Come on, tell me. Hundreds of crores. If I come to you, tell you, give me your brand name. You are selling your mineral water on the name of Bisleri, no? Give me the Bisleri brand name. I want to buy that Bisleri brand name from you. Even I am manufacturing mineral water. On my mineral water, now I will stick that sticker of Bisleri and sell that water in the market. Can I come to you asking for that brand name? Yes. And if I'll come, how much will you charge for that Bisleri brand name? Hundreds of crores you will say. Sir, give me 500 crores for that brand name. Because for the next many years, if you will use this name, customers will come by my name only, which you are going to use for your mineral water. Yes or no? I paid you 500 crores for that Bisleri brand name, which you did not buy from anywhere. Did you buy it from anywhere or it got self-generated? Self-generated. So whenever you are now selling that Bisleri brand name, is it your capital asset? Yes. You are selling it? Yes. For 500 crores? Yes. Now what will happen? You will calculate capital gains. Capital gains on transfer of your trademark or brand name, which you self-generated. Full value of consideration 500 crores. Transfer expense, whatever it is. Net consideration will come. What cost you will reduce? You will always take cost as nil because it was self-generated by you. Yes. Because here if we don't define the cost, no, problem will be you are going to tell us that see this brand name, this goodwill, these assets, even though they are self-generated, I have incurred some cost on them. So many years I am doing my business. On my business, I am incurring many expenses. Out of that expense, some proportionate expense would have incurred to generate them also. But I don't know how much. That does not mean that I have not incurred cost. Cost cannot be determined. You will say that cost cannot be determined. And hence I will not be able to calculate the capital gain. You can say this also. And this type of case also happened in the past, B.C. Srinivasa Shetty, the name of the case. In that case, the assessee sold the goodwill of his business or profession. He sold the goodwill for few crores. For example, 10 crores. He sold his goodwill. He sold his business. Along with the business, he sold the goodwill also to someone. That goodwill he self-generated. For so many years I am doing my business. So in my business, my goodwill has been generated, no? Now if someone is coming to buy the business, definitely he is going to buy that goodwill also. For that goodwill only he is coming to buy my business. Otherwise, he can start his business on his own. Why would he take a running business from someone? For the purpose of his name, for the purpose of his fame, for the purpose of that goodwill of that business. So I sold my business, and along with that assets, liabilities of the business, I charged 10 crores extra for the goodwill, which now you will be using of this business. That goodwill, no, I did not purchase from anywhere. It automatically got self-generated, and along with my business, I am selling that goodwill for 10 crores. Now the assessing officer told me to calculate the capital gains on that goodwill also, which I self-generated and sold for 10 crores. I started calculating capital gain. Full value of consideration 10 crore, minus transfer expense, net consideration 10 crore. I was confused. What cost should I take? What cost should I take for the goodwill which I self-generated, and I am transferring that goodwill which I self-generated? What cost should I take here? I got confused. Because I did not want to take nil over here. Because if I would have taken nil, entire 10 crore which I have received would have been my capital gains. So what I did, I thought that what amount of cost should I allocate to this goodwill. So then I thought that I started this business 30 years back. Since 30 years, I have been doing this business. Every year I am incurring some or the other expense on my business. Meaning out of 30 years, I have incurred so much expense on my business. Out of that expense, some expense, proportionate part of the expense would have contributed to generate this goodwill also. Meaning that goodwill which is self-generated is not coming free of cost. There are some costs which are incurred in my business. Out of those costs, some proportionate amount also relates to generation of this goodwill. But I don't know how much. And there is no method also which is prescribed to calculate it. Hence, I will not be able to calculate the cost. So I went to the assessing officer. I told the assessing officer, see assessing officer, I was calculating the goodwill, capital gain on goodwill which was self-generated and which I have transferred. So I am not able to determine the cost. So that AO said, why are you bloody determining the cost? It was self-generated. No, take nil. I said, no, I cannot take nil. How can you say that the cost of my goodwill which I am selling for 10 crores is what? Nil. Even if it is self-generated by me, some or the other cost would have been incurred on the generation of the goodwill also, no? And knowing that out of these many years, many expenses incurred by me, some part of the expense is also incurred on this goodwill, I cannot take nil knowing that. And you are telling me to take the cost as nil because I have self-generated. No, this is wrong. And me and that assessing officer, we both fought. And the case went till Supreme Court. And Supreme Court gave the decision in my favor that the assessee is saying correct. What? If there is some or the other cost involved in the self-generation also, which cannot be determined, meaning the cost cannot be determined, that does not mean the cost is nil. And in the event if the cost cannot be determined, capital gain cannot be computed, assessee should not be harassed. No capital gain will be calculated. And your law also does not tell you to take nil in this case. And your law does not prescribe any rule also to tell the assessee that how to calculate the cost in such cases. So your law is silent about these items. Neither the assessee can determine, because it cannot be known that out of the cost incurred in the business, how much cost actually relates to self-generation. It cannot be determined. Neither your law tells anything that this should be taken as cost. nor there is any rule prescribed in your law telling the assessee that follow this rule, you will get the amount of what? Amount of cost for the goodwill. So in the absence of such information, cost cannot be determined, cost cannot be identified, and without the identification or determination of the cost, without this important element, capital gain cannot be computed. So no capital gain. Judgment in the favor of assessee. What happened, Now the department got afraid that all these assets which are listed over here, whenever they are self-generated and sold, no, they are sold for thousands, no, they are sold for lakhs, no, they are sold for crores of rupees. And crores of rupees coming as what? Consideration on sale of these assets, lakhs and crores of rupees coming on sale of these assets will be out of the income tax net now. Why? Because whenever they are self-generated, cost cannot be determined. Assessee will always give the reference of the Supreme Court judgment. And even after having so much of the amount, so much of the profit, he will not pay a tax on a single rupee. So it is very important for us to define in the law itself that what cost should be taken in such case. Then under section 55 subsection 2, clause A was inserted, and in that clause they said that if this is self-generated, no, we know that certain cost is incurred, but we cannot prescribe a method for that. Because bloody you being the businessman cannot identify that how much cost you have incurred. So how we will be, prescribing any rule? Prescribing a rule also will be of waste only. Because there cannot be a standard formula to determine that cost, no? Getting my point? But we want to charge tax on the capital gain arising from here. For that, we don't have any other option other than to take cost as nil here. So now in the law itself they have defined that we are not going to listen to anything. If you are selling these assets as a capital asset, you are selling them, you are transferring them, whatever capital gain will arise, to calculate that capital gain, we have to define the cost here also, here only. And the cost should be taken as nil only to calculate the capital gain. Now the cost is defined. Hello sir, if you know any formula, calculate with that formula. If you know exactly how much you are spending, prove it. We are going to allow. But if it is self-generated, cost cannot be determined, then definitely we are not leaving the capital gains. We are defining that the cost will be taken as nil. Now you cannot take the benefit of that judgment. That cost cannot be determined. Even if it cannot be determined, we have prescribed in law itself, no, take this cost and calculate the capital gains. Hello sir, understood? So what if these assets you are transferring? You are the assessee transferring these assets. Will you calculate capital gain? Yes. So to calculate the capital gains, what cost you will take? If these assets are self-generated, take their cost as nil only. Hello sir, but if you had purchased them, do you remember? I went to Bisleri and I bought Bisleri brand name. Now I am buying the Bisleri brand name. Have I self-generated or I bought it? I bought it. So if I will buy it, how much will be my cost? The actual cost which I have spent. Hello, that will be my cost of acquisition. How much I gave? 500 crores. That 500 crores for that brand name will be my cost of acquisition and will be full value of consideration for Bisleri company. So Bisleri company will calculate capital gain? Yes. 500 crores will be full value of consideration minus transfer expense. Net consideration 500 crores minus cost. Bisleri company will take nil. Because for Bisleri company it is what? Self-generated. Now I have bought from Bisleri company. Now I will be using it for some years in my business. And then what if I sell it in future? What if I sell it in future? What will be my cost? I will take actual cost only, 500 crores, which I have paid. I have not self-generated. So when I will be selling, capital gain will be calculated for me also. But the calculation of capital gain will happen by taking what cost? nil. No, it will be actual cost. So here the cost of acquisition will be actual cost. Sir, even if self-generated or acquired prior to 1st April 2001, we are supposed to take same self-generated then nil and purchased then actual cost. Here option to take FMV as on 1st April 2001 as COA under section 55 to B. Available or not available? Not available. So even if they are self-generated or acquired prior to 1st April 2001, the cost is going to remain same. What? If self-generated, then nil, and if acquired, then actual cost. This option to take fair market value is not available in that case. What if they are self-generated or acquired on or after 1st April 2001? Then the same only, no? Hello? Getting my point? Why this option is not available? Tell me. Why it is applicable for all the assets but not these assets? These assets are unique assets, unique, one of its kind. You will not find any other assets like them. You will get Nike only one no, or other Nikes also. Only one Nike, unique. You will get UT Academy. Can you see above? UT Academy. This is my brand name. And the way in which it is presented, no, that is my logo. That is my trademark. I have registered that. See. And if I have registered that, what I'll do? Now I'm offering my services on this name. After few years, no, this name will be famous. 100%. Full confidence. And if some class is coming to take over my class, I will sell my class, but I will not sell this name. If you want to have this name on your coaching which you are giving on my name, I have made this name for so many years. Now see, my name is so strong in the market. No, now students are coming with this name only. So I'm able to attract the students by this name. People see UT Academy, people see Umang sir, they come running behind me. Why? Because I've taken so many years to get that name. So just imagine this brand name, this trademark, whatever is there. Can I sell it? Yes. And if I sell it, I'll get the money. Was it self-generated? Yes. This is a unique name, no? No other name like this is there. What will be its fair market value? Fair market value can be of those assets which are, which you find multiple assets like that you can find. Hello? Can you find plant and machinery? Yes. Similar type of plant and machinery, many plant and machineries you will get. Can you buy building? Yes. Many type of buildings of similar nature you can find. But this name is unique. What market value you can assign to this? There is no market value. There is no market for these type of commodities because this is one of its kind. Market value does not exist only for these type of assets. Everyone will have a separate value which he or she can assign to this brand. If my brand for me, okay, which I have self-generated, if you are coming and buying this, You can give 50 lakhs for this. If somebody else is coming, according to his perception, this brand is very famous and it can give him benefits, more benefits as compared to your perception. He can give me 1 crore for this brand. Same brand can have this much, this much difference. Somebody can come and he will say, I don't want to give a single rupee for this brand. I don't know only. Now tell me, what fair market value will I have for this type of assets? The fair market value for these type of assets does not exist only. So even if we want, we cannot give that benefit. We cannot extend that benefit to you because the fair market value does not exist for these type of assets. Hence, the fair market value as on 1st April 2001, we are giving you the option to take that. For all assets, you take that option, no. But leave these assets which are given in 55(2)(a) because for them, fair market values does not exist only. Getting my point? Hello, sir. Now, one more important thing I'll tell you. If these assets are there, no, I write down the names now, one by one. If they are self-generated, their cost is nil. If they are acquired, their cost is actual cost. Okay. So what I'll do, I'll write down their names once again. But for me, it will be very easy because I can copy directly. Okay, no? What I'm trying to do, I'll tell you. Wait for a second. See, I've written all the names. Okay. Now, their cost of acquisition, if I'm writing cost of acquisition, if they are self-generated and if they are acquired. If they are self-generated, if they are acquired. Okay. Everywhere I know what is to be taken as cost. Come on, tell me. Will I take nil? Yes. Will I take nil? Yes. Will I take nil? Yes. Will I take nil, 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 nil? Yes. Nil, 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 nil. Everywhere. Understanding? Nil, nil. Here also it is nil. Then again what I'll do? I'll take the nil for all. The cost of acquisition will be nil. Very good, sir. Here also I will write down nil. Here also it is nil. Okay, no? Yes. Everywhere I am writing nil, nil and nil. How many assets are there? Okay. This one I am writing here. So everywhere if they are self-generated, the cost is nil only. What if they are acquired? Then I have to take actual cost. I have to take actual cost. I have to take actual cost. Actual cost, actual cost, actual cost. Duplicate. Duplicate. What I am taking, are you understanding or not? And why I am doing it, now you'll understand. See, this is what is we have just now covered. If they are self-generated, cost will be nil. If they are acquired, their cost will be actual cost. Cost of acquisition. Now what will be their cost of improvement? What will be their cost of improvement? Yes or no? See, I'm talking about goodwill trademark. Goodwill, trademark, right to manufacture, right to carry on, or okay, just a second, just a second. Trademark is not there. Any other intangible asset and any other right. Okay. Any other intangible, any other right. Perfect. So how many assets I have marked? 1, 1, then this is 2, then this is 3, then this is 4, and the last one 5. I have marked these 5 assets, okay, no? And I will highlight also, color, yellow color. Now read their names. Goodwill of business or profession. Any other intangible asset. Right to manufacture, produce or process any article or thing. Right to carry on any business or profession. Then any other right. Okay. For these assets, their cost of improvement will also be taken as nil only. Wait, whether they are self-generated or acquired will not make any difference. Their cost of improvement will also be taken as nil only. So even if they are self-generated, then also take nil. And even if they are acquired, then also their cost of improvement will be nil. So cost of improvement, I will write down if they are self-generated and if they are acquired. What will be their cost of improvement, friends? Their cost of improvement will also be taken as nil. Nil. I will write down nil and nil. Tell me here. Third one, nil. Those only which I have marked. Okay, no? Even if they are self-generated or they are acquired, will not make any difference. Their cost of improvement will also be taken as nil only. Because even that cost of improvement cannot be determined in case of these assets. Okay. Even if they are self-generated or they are acquired, their cost of improvement cannot be determined. Incurred, but cannot be determined with precision. So later on you will say that cost of improvement cannot be determined. No capital gain. So before you say, we are only telling you that take the cost of improvements also nil. But wait. In case of other assets, now I will mark them with different color. Color, pink color. Trademark or brand name. Tenancy rights. Stage carriage permits. Loom hours. And I will highlight them also with blue color. 1, 2, 3 and 4. These 4 assets. Whether they are self-generated or acquired will not make any difference. Whatever cost of improvement which you have actually done on that actual basis we will allow. Getting my point? Their cost of improvement will not take nil. Whatever improvement you have done on these assets and whatever cost you have incurred on these assets, cost of improvement, whether they are self-generated or acquired, will not make any difference. But whatever cost of improvement you have acquired on these assets only, we will allow. And that also on actual basis. Actual cost of improvement will allow. Getting my point? So bring evidences that, okay, this cost of improvement you have incurred. That should be an evidence. Okay. Then we are going to allow. So here, can I take ACOI, actual cost of improvement? Actual cost of improvement. Here also, can I take ACOI? ACOI. Again ACOI and ACOI. And here also ACOI, ACOI. Meaning actual cost of improvement, whatever you have incurred, we will allow that actual cost only. But wait, for others which we have marked yellow color, for them cost of improvement will also be taken as nil, because it is next to impossible to determine their cost of improvement also in case of those assets. Yes or no? This table is the master table. Now whether you self-generate or acquire, prior to 1st April 2001, take this only. Whether you self-generate or acquire on or after 1st April 2001, take this only. Done. 55(2)(a). Will you remember? Sure, sir. Very good. Perfect. Perfect, sir. Now, see, this was the thing which we were discussing. Okay, no? Now, for these assets, whether they are short term or long term, what will be the period of holding? The date when you set up the business will be the date from which the goodwill starts getting generated. Or the date on which you acquired the goodwill will be the date on which you started holding the goodwill. Yes or no? So these assets, when you started the business, when you started the profession, from that day they starts getting generated. So date of starting the business, date of starting the profession will be the date on which you started holding it. They start getting generated. For self-generated, start from the date of business till the date of their transfer. That is their period of holding. Yes or no? But when you purchase them, then date of acquisition, date of purchase will be the date of acquisition. From that day only you are holding it. Till what day? Till the date of transfer. How much period of holding will check? This period of holding will be from this date to this date. But how much you will check? 12 months you will check. 12 months is for those 4 assets only. Do you remember? 4 assets: listed securities, units, EOMF, units of UTI, and zero coupon bonds. Can I say this is that asset, 4 asset list does not contain all these assets. So you cannot take 12 months for them. So 2 assets, unlisted shares, immobile property, there also this does not come. So 36 months you will check. And you will check 36 months only if they are transferred prior to 23rd July. Now all the assets for which 36 months was checked, now that period is 24 months. Hello sir. So I am telling you how much you will take period of holding? 24 months. From now onwards. Earlier you used to check 36 months. Yes or no? So period of holding from this date to this date. Date of starting to date of transfer in case of self-generated. Okay. In case of acquired, then date of purchase to date of transfer. This is the period of holding. It should be 36 or less. Then short term. Then cost will be this much. Hello. And no indexation. Getting my point? And what if more than 36 months? Then cost will be this much and you will get the indexation benefit also. Because the transfer happened prior to 23rd July. Hence you are checking 36 also. But what if that transfer happened on or after 31st July? Period of holding you know na, from this date to this date. Period of holding 24 months or less. Short term. Cost will be this only. Hello. But without indexation. But wait, what if this date to this date, period of holding is more than 24 months? Then these assets will become long term. And still there will be no indexation because now you are checking 24 months. Why you are checking 24 months? Because you are transferring them on or after 23rd July. So if you transfer them on or after 23rd July, you will check 24 months period of holding. And if the period of holding is more than 24 months, then will you index? The answer is no. You will not do any indexation. Because indexation is not available if the transfer is made on or after on or after 23rd July 2024. For all the assets, the indexation benefit is taken away now. Will you remember this? Sure, sir. See, if the above assets were self-generated, option to take fair market value is not available. I have already told you. Cost of acquisition shall be either nil or actual cost only, even if they are self-generated or acquired prior to this. Meaning this option is not available. Period of holding to be checked for the above asset shall be 36 months, 24 months. If they are transferred prior to 23rd July, check 36 months period of holding. If such assets are transferred on or after 23rd July, then check 24 months. If 36 months or less, then they are short-term capital asset, cost you know, no need to index. If the period of holding is more than 36 months, they are long-term capital asset, cost you know, wherever applicable, do the indexation also. Wherever the cost is there, other than nil, wherever the cost is there, do the indexation also. Because you are transferring prior to 23rd July. Now what if you are transferring on or after 23rd July? You will check 24 months only, no? So 24 or less, then they are short term. No indexation for short term. But what if the period of holding is more than 24 months? They are short term? No, now they are long term. Even if they are long term, no indexation will be available because the transfer is on or after 23rd July. Sure, sir. One thing is repeated at least twice, thrice, 4 times. I am telling you. If you don't remember now, then you can never remember. Once, that is to make you comfortable that okay, this is the thing. Second, to make you aware what is happening. Third time, now you will remember. Fourth time, even if you have not remembered by third time, fourth time you should completely understand and remember also. Now pay attention on this. In case where the above assets are acquired from previous owner, this particular part, no, I will keep this thing pending right now. Why? Because there is one concept which I have to discuss, 49.1. Then after 49.1, I'll come here and then I'll tell you. Till that time, you will not understand anything. So there is no point of, discussing about this right now. Okay? Later on when I'll complete 49.1, no, that time I'll come and tell you this. Right now, keep this pending. Now, goodwill of the business or profession acquired, not self-generated. Can you acquire goodwill? Hello? But now that goodwill you are acquiring for your own business, any profession, goodwill of that business, goodwill of that profession you are acquiring, but you are acquiring it for your business or profession. So do you remember you used to claim depreciation on that goodwill till 31st March 2020? If you acquired that goodwill prior to 1st April 2020, saying that I am acquiring goodwill for the purpose of my business, for the purpose of my business or profession. So you used to take the depreciation on that goodwill. Example, you acquired goodwill for your business, for your profession, you acquired goodwill prior to 1st April 20. In 17-18 you acquired. In that year, 17-18 also, 18-19 also, 19-20 also, these 3 years you would have taken the cost of that goodwill as a depreciation under PGBP head. Yes or no? But from 1st April 2020, now you don't get any deduction for depreciation on goodwill. So whatever goodwill which you had, on which you were claiming depreciation, on that whatever balance WDV remains will no more be allowed as depreciation under PGBP. That balance WDV will be ignored from PGBP. So do one thing, bring that under capital gains. Did I tell you that? And whatever goodwill which you will acquire on or after 1st April 20, on that anyways you are not going to get any goodwill, any depreciation. Entire cost would have been disallowed under PGBP head. Entire cost you claim under capital gain head. Getting my point, everyone? Hello, sir. So the goodwill which was acquired by you for your own business or profession, that goodwill was acquired prior to 1st April 20. So whatever actual cost which you had incurred minus whatever depreciation out of that cost which you would have claimed under the PGBP head, after reducing that depreciation, whatever balance cost remains, meaning whatever WDV remains, that WDV, that remaining cost of that goodwill will only be allowed under capital gains now. Now that goodwill is thrown out of PGBP and that goodwill has come to capital gain. So whenever this goodwill will be later on transferred, to calculate the capital gains on that goodwill, what cost you will reduce? You will reduce the WDV as cost. And the goodwill which you acquired on or after 1st April 20, the entire cost of that goodwill was disallowed. Not a single rupee out of that actual cost was allowed under PGBP head as what? Your depreciation. So if that entire cost got disallowed, do one thing, no. Bring that entire cost along with the goodwill, bring that entire cost under capital gains. Whenever this goodwill you will transfer, reduce this amount as actual cost. Actual cost, reduce this amount as cost of acquisition. Cost of acquisition of this goodwill will be actual cost. And cost of acquisition of this goodwill will be actual cost minus depreciations claimed till 31st March 20. Getting my point? Everyone? Now wait, if these assets, which I just now told you, these assets, you acquired for your own business or profession. So whatever acquisition cost was there, no, that is your cost of acquisition. How much you paid for that Bisleri brand? 500 crores, no? So what is the cost of your brand name? 500 crores. Now, are you going to use that brand in your mineral water business? Yes. This is intangible asset used in your business. Block will be formed. In that block, this actual cost will go there and will be claimed in the form of depreciation slowly, steadily. Getting my point? And whenever this goodwill will be sold in future, no, it will go out of business. So whatever money will come by selling that money will be adjusted from the value of the block there. Getting my point? But if it is not used by you in your business or profession, you have just acquired that, keeping it as your capital asset, not to be used for the purpose of business or profession, but you have acquired it. For example, tenancy rights. Tenancy right you have acquired, no friends, tenancy right you have acquired, no. You have paid 50 lakh rupees to someone to acquire the tenancy rights. That tenancy rights you are not going to use for your business or profession. So that is your capital asset. So whatever cost you have paid for it will be your actual cost. And that actual cost will be allowed as a deduction, as a cost, whenever you will sell that tenancy right in future as your capital asset. So in the future, when you are selling those tenancy rights to someone for 70 lakhs, you will reduce cost 50 lakhs to calculate the capital gains 20 lakhs. Now that tenancy right is not used by you for your own business or profession. That is not going to form part of block, etc. Getting my point? But brand name, trademark, goodwill, etc. used to form part of what? Your business. Out of that, goodwill is thrown out. But trademark, brand name, etc. will still be used in your business. Hello? So when you acquire it from someone at whatever actual cost you are acquiring it, that will be the cost of acquisition. But do one thing, no, instead of considering here, you have to take it to PGBP head in the block. Now you are going to show them in the intangible assets block. And in the intangible asset block, you are going to show these assets at what cost? At actual cost. Show it there. Instead of claiming this actual cost here, now claim it under the head PGBP. Now these assets will be used for your business or profession, no? So claim this cost there. But there it will be allowed in the form of depreciation. There this will form part of your block. Now whatever value you will receive by selling them, no, will be adjusted out of the block's value and not here. Because cost is also not here. Got it? Everyone? Okay. This cost of improvement is to be taken as nil. Somewhere it is taken as actual. And this whatever is written here was written here. Explained. This is explanation and this is the summary. And this summary, same summary we have also made. Okay. So this is the end of 55.2a. Will you remember? If any of these assets are coming in the question, will you be able to identify their cost properly? Will you be able to calculate the capital gains properly, everyone? So I'm going to send you a sheet very soon for capital gain question. I have sent you for PGBP also, no? PGBP. In PGBP sheet, no, there are few questions which are other than study mat questions. Those specific questions are made. What I have done, I have taken MTPs, RTPs, different material, and combining those sums, I have created few new sums for you. And if you will see those sums, no, those are new sums other than your ICI module sums. So because ICI module sums all we have solved, no. So only 5-10 extra questions will be there. Why don't you solve them? That sheet is not going to give you any benefit after your exams are over. That is going to give you benefit till the time you are doing it before your exams. I'm not forwarding them just for sake of having them in your phone. If you're not using it, delete it from your phone also. Extra questions are there. If you'll solve them, you will get doubts. And those doubts you can ask me. And 100% I'm telling you, don't be surprised if any of those questions come in your exam. Or similar question can come in your exam. What will you do then? Sir, we did not solve these kind of questions. I sent you the notes. In those notes, these type of questions were there. But you did not solve. So that is your mistake, no? I have sent for all the subjects, all the topics which I have taught so far. And capital gain is under process. And tell me, out of those, how many of you have solved? At least 1 or 2 chapters you would have taken. Yes, bothered also. Others forget about it. When you will solve? After your exams are over. Exams are very nearby. So after completing that entire chapter, go and do all those questions, extra questions from that sheet. That will be very helpful for you. Okay? Now come to the next part. 55. We are still doing this part only, friends. Come on, see. We are still doing this part. This one. Now what we have done? We have combined this with 55-2B. Then we have combined this 55 with 55-2B. But 55-2B, option to take fair market value, cannot be applied in 55-2A assets. Now we are doing this and this together. Shares. And this we are going to do later on. 55-2AC we are going to do later on. When? Last lecture of capital gain. So when capital gain will be the final lecture, no? In that lecture we are going to study tax rates. With tax rates, I am going to teach you 112A, long-term capital gain under section 112A. That time we are going to discuss this 55-2AC over there. And that time this and this both will be covered together. Right now, this and this you understood. This and this connectivity you understood. Now we are doing this and this. What are the assets? Come on, tell me. Double A of 2 of 55. Original shares means shares originally acquired by the assessee, meaning you have paid the money to buy the shares. So you have actually paid the money from your pocket. You have incurred the cost to acquire them. They are originally acquired shares. Hence we call it original shares. There are nothing called as duplicate shares. This is original, so duplicate. No. Original shares means those shares which you have originally acquired by paying money for that. Okay. So tell me, these original shares, what will be the cost of acquisition? Actual cost. Simple. How much you have paid to acquire them? Actual cost. And at the time of acquisition, you might have paid brokerage, etc. No, add that. Getting my point? That is an acquisition related cost. So total actual cost. What did I say? Total actual cost of that asset, actual cost of these shares will be your cost of acquisition. But if these shares were acquired by you prior to 1st April 2001, will you get the benefit of taking the fair market value as on 1st April 2001? Absolutely yes. That is applicable for all the assets, including these shares also. So if the original shares which were acquired prior to 1st April 2001, it can be acquired on or after also 1st April 2001, yes or no? So if they are acquired prior to 1st April 2001, on or after 1st April 2001, sir, what is to be done over here? Simple, sir. Here cost of acquisition will be their actual cost which you have paid. That's it. And here what will be their cost of acquisition? Their cost of acquisition, you can take their actual cost also, or you can take fair market value as on 1st of April 2001 also, whichever is sir higher, sir. Very difficult, no? Or easy? Now 2-3 more things I'll be telling you. See, 55(2) says only this much about these shares. Now whatever discussion I am doing now with these shares now will be extra discussion which I want to connect here. These things are not written in 55(2)(a). 55(2)(a) talks only about the cost which we have discussed. That's it. Now whatever discussion I am going to do is extra discussion. Okay? Tell me one thing. How much period of holding you can see? First of all, tell me from which date you will start their period of holding. From which date? Date of purchase, no? Kaushik, in the case of shares, there will never be 36 months. Now these shares can be listed, then check 12 months. And these shares can be unlisted, then check 24 months. Even if transferred prior to 23rd July, even if they are transferred prior to 23rd July, or they are transferred on or after 23rd July, will not make any difference. Okay, you will check period of holding 24 months or 12 months depending on the fact that whether they are unlisted or they are listed. Getting my point? You never check 36 months for shares, no macha. Understood? So if these shares, original shares, are what? L for listed. I'll write full listed or unlisted. Wait, not here. I'll write down below this so that you understand what I'm exactly doing. For the original shares which you acquired, the period of holding which you want to check, okay, no? Check period of holding either 12 months or you can check 24 months. Check 12 months if listed, and check 24 months if unlisted. Done, sir? transferred before or on or after 23rd July 2024 will not make any difference. Whether they are transferred prior to 23rd July or on or after 23rd July will not make any difference. Every time we will check 12 months and 24 months. Yes or no? Come on, tell me. Now, what will be the period of holding? Come on, tell me. Period of holding. From which date to which date? Now you will see period of holding. If unlisted, if they are unlisted, then from date of allotment till date of transfer, till the date on which you transfer. Okay, no? So the date on which the company allotted these shares to you, from that date only you started holding, no? Hello? Till what date? Till the date of transfer. Getting my point? Till the date immediately preceding to date of transfer, I mean. Yes or no? So this period you will check. This period should be 24 months or less. Then the unlisted shares are short term. Hello? What if this is more than 24 months? Then the unlisted shares are long term. Got it, got it, got it. Unlisted shares you bought. Unlisted shares you bought. The date on which they are allotted to you is the date from which you are starting. Your period of holding will start. Just giving the application money to the company, you don't get the shares, no, till the time the company does not issue, till the time the company does not allot. So the moment the company has allotted, you have started holding from that day only. Hello, sir. From that day till what day? Till the date immediately preceding to date of transfer. And this period, shares are unlisted. So this period, 24 or less, short term. More than 24, long term. Yes or no? Sir, transfer is made prior to 1st April 2000. Sorry, transfer is made prior to 23rd July. Then also the same thing. Hello, sir. And transfer is made on or after 23rd July. Then also the same thing. Period will remain same and you have to check 24 months only. Getting my point? Now, what if the shares are listed? Shares are listed. If they are listed. By the way, listed shares are never allotted to the shareholder. They are given to depositories. They are allotted to depositories. Do you remember NSDL, CDSL? So whenever the company would want to list their shares in the stock exchange, no, that time the company will first allot the shares, register the share on the name of NSDL and CDSL depository. Now these shares which are issued on the name of NSDL, CDSL will be deposited here only. This will now be converted into dematerialized form, demat. Now these shares will be available for trading in the market. Trading for other shares which are not allotted by the company cannot happen. Only those shares which are allotted by the company can be traded in the market. That was Harshad Mehta scam, you know, in which Harshad Mehta used to trade in those shares also which the company did not allot. Fake share certificates used to be printed and those were given to the banks as collateral to get what? To get the loan, and that loan he used to pump in the market. And you know, he used to bring the market up, bring the value of the shares up, and he earned profit, huge profits. Then from those profits he used to pay the loan, get the share certificates back, used to throw them because these were fake. No, this happened only because there was physical share certificates. Physical shares were traded in the market. So after the Harshad Mehta scam, no, all these things happened. So the government said no, now no physical shares will be traded in the stock exchange. It will be traded in demat form. Only those shares which are issued by the company can now be traded. No other shares. So that is possible only if these shares are not allotted directly to the shareholders. These are allotted to depositories, which now will convert them into demat form. Now this dematerialized shares of NSDL, CDSL, only these depositories will now be available for trade in the market. No other share by anyone else can be traded on the stock exchange other than those which are available with the depository. Now depositories have converted them into dematerialized form. Now whenever someone buys, no, so they don't get real shares. They get the dematerialized share, demat shares. So they will have a demat account open with a broker. So when you go and buy, tell your broker that broker, I want to buy 100 shares of Reliance. Broker will go in the market. 100 shares dematerialized form will be available in the market. Broker will pick up from there and credit in your demat account. You become the shareholder. But not the registered owner on whose name the shares are allotted. You are the beneficial owner of the shares. And if you are the beneficial owner of the shares, meaning that the shares are not allotted on your name, now these listed shares which you have bought, no, the date on which you have bought them, you became the holder. You started holding them. So their period of holding is very easy. The date on which you purchase them is the date from when the period of holding starts. Hello? And the date on which you sell them is the date on which the period of holding ends. But for unlisted shares, you have to always check from the date of allotment. Will you remember? This is extra discussion which I am doing. I am still in 55 to AA. Cost we know, original shares, what cost, actual cost we are supposed to take, whether listed or unlisted. Actual cost has to be this much and actual cost will only be taken as cost of acquisition, yes or no? But wait, if they are acquired prior to 1st April 2001, actual cost of fair market value as on 1st April 2001, whichever is higher can be taken as cost. This is done. But this cost when we will reduce, we will have to decide no whether this cost will be indexed or will not be indexed, whether the gain arising on transfer will be short term or long term. So for that we need to know the period of holding, from which date to which date the period of holding should be there. How much period of holding we should check? We should check 12 months or we should check 24 months. And if it is more than 12 months, if it is more than 24 months, then whether we are supposed to index it or not, all those discussions should happen with this only, here only. So later on when we go and solve the questions, no, we find everything together regarding shares at one place. I hope you all are understanding. Sure. So what is the cost? This. Now, what will be the period of holding? If the shares are unlisted, then the period of holding will start from date of allotment. The shares which you buy, what will be their period of holding? The date on which the company has allotted till the date of transfer. And what if they are listed? From their date of purchase. From date of their purchase from the market till date of their sale. Okay, no? Now wait. If unlisted, color, blue color. If unlisted, how much period you will check? 24 months. Whether you have transferred them prior to 23rd July or you have transferred them on or after 23rd July will not make any difference. You will always see 24 months period of holding. Earlier also it was 24 months. Now also the period of holding is 24 months. You have to check. If 24 months or less, if the unlisted shares period of holding is 24 months or less, then they are becoming short term. And if their period of holding is more than 24 months, then they are becoming long term. And wait, color, green color. If the shares are listed, so you will take the period of holding starting from date of purchase till the date of sale. And how much you will check? This period should be 12 months or less, then the shares are short term. This period should be more than 12 months, then the shares are long term. So you'll check 12 months if the shares are listed. Whenever the transfer is made, transfer can be made prior to 23rd July or after 23rd July. Hello, sir. Now, if you are checking the period of holding has to be from this date to this date, this date to this date. Period of holding you are supposed to check how much? 12 months and 24 months. Now the period of holding, for example, the period of holding, which is 12 or 24, no? If this period of holding can I say it can be less than or equal to 24 months or 12 months as the case may be. If unlisted, then less than equal to 24 months. If listed, then less than equal to 12 months. Yes or no? Then they will become short-term capital asset. Ayyo, short-term capital asset, no? Rajlakshmi, you are not understanding or understanding. Rajlakshmi? Rajlakshmi, I'm talking to you. Understanding, no? Short-term capital asset. What will you do? Come on, tell me. Cost of acquisition you have determined. You will take the entire cost. No need to index. No indexation. So, indexation or no indexation? Indexation will not be available. But what if their period of holding is greater than 24 months or 12 months? Then they will become long-term capital asset, and now you have to see that when they are transferred. If they are transferred prior to 23rd July, then you will get the indexation also. And if they are transferred on or after 23rd July, then no indexation. Getting my point? LTCA and transferred prior to 23rd July 24. Indexation or no indexation? Indexation will not be available. And if they are transferred on or after 23rd July 24, then here it will be indexation. Indexation will be available here because before on or after 23rd July, then there will be no indexation. Getting my point? Everyone understood this much? So I will ask you one by one. This is only one part, one part. Bonus is remaining. Rights remaining. Right shares also remaining. For every type of shares you are supposed to do this much. So first of all, tell me, can you have shares? Go and buy from the market. You are having shares. Is it your capital asset? If you are in the share trading business or speculation, then it is not your capital asset. But you are investing in shares, then it is your capital asset. Okay, no? It is your capital asset. Now, if you sell the shares, what did I say? Sell the shares. Will you calculate the capital gains also? Because capital asset you are having, you are selling, meaning you are transferring, capital gain will be calculated. Full value of consideration minus transfer expense, net consideration. You will reduce cost now. What cost you will take? 55 to AA. If you acquired the shares prior to 1st April 2001, these shares you are selling, so the cost of these shares will be actual cost or fair market value as on 1st April 2001, whichever is higher. Take that amount as cost. But if you acquired these shares on or after 1st April 2001 and you are selling these shares, the shares which you are selling right now, the capital gain which you are calculating for the shares, these shares you acquired when? On or after 1st April 2001. Then what will be the cost? actual cost which you incurred will be the cost. Common sense. Nonsense. Understanding? Cost, did you understand? Now tell me. You know that how much is to be deducted at cost. Now will you deduct the cost with indexation or without indexation? Depends that whether the shares are short term or long term. But now to determine whether the shares are short term or long term, you will have to check the period of holding. So first of all, tell me from which date to which date the period of holding will come. So you tell us first that which type of shares are there. Because period of holding for unlisted shares will be separately determined and period of holding of listed shares will be separately determined. So let us say the shares were unlisted. From which date to which date you are going to take the period of holding? From the date of allotment till the date of transfer you are going to take the period of holding. And this period of holding 24 months or less, then short term, more than 24 months, then long term. Whenever you have transferred the shares prior to 23rd July, on or after 23rd July will not make any difference. Period of holding will come from this date till this date and you will check only 24 months. Hello sir. If 24 or less, short term. Cost you have determined like this. Hello. No indexation. If the period you have determined is more than 24 months, long term. Hello. Cost you have determined. Indexation will be done if the shares are transferred prior to 23rd July. That's it. And if you have transferred the shares on or after 23rd July, no, then cost will be this only, but there will be no indexation. Will you remember, sir? Everyone? Now, sir, what if these shares were listed, sir? Listed preference shares. Then listed shares. Then I'm talking about only those shares which are not covered by 55(2)(a)(c). Because for the shares which are covered by 55(2)(a)(c), we have to go there and we have to determine the cost as per 55(2)(a)(c). Yes or no? So even if they are listed, I am talking only about those listed shares which are not covered by 55(2)(a)(c), which will be listed preference shares. Listed preference shares can be there, no? So listed preference shares or listed equity shares also can be there, but STT is not paid. So the gain will not be STT paid gain. So for them, I cannot use 55(2)(a)(c). I will have to stay here only. Getting my point? I will go to 55(2)(a)(c) only if listed equity shares transferred as long-term capital asset and on which STT is paid, both at the time of purchase and transfer. And I am calculating long-term gain. Only then I will go to 55(2)(a)(c). Otherwise, listed also covered here. Now listed shares are there. Cost will be determined like this only. See, this is the cost. For unlisted also cost is this. Listed also cost is this. Sure, sir? Now for unlisted shares, cost is this. I will reduce while calculating capital gain. I will reduce this cost only, sir. But period of holding, from which date to which date I should take? Simple. Date of purchase. The date on which you purchased and the date on which you sold. That's it. Simple. Now this period, 12 months or less. Short term. Cost you have no? No need to index. And what if this period, date of purchase to date of sale, what if this period is more than 12 months? Then the shares are long term. Cost you have no? Index it. Indexation benefit will be available. Getting my point, everyone? Sure, sir? Simple. Whether you transfer these shares prior to 23rd July or not, period of holding will remain same. You will check 12 months only. But you will index only if they are long term and transferred prior to 23rd July. If you transfer on or after 23rd July, no indexation also, even if they are long term. Got it? No, easy, no? If you repeat it 2 or 3 times or solve it in 1 or 2 questions, no, you will get full confidence over this. Now, bonus shares, no, you only will tell me. You all will be helping me to determine the cost of bonus shares and all. Okay, so we are still under 55(2)(a). Should I move ahead? Guys, should I move ahead? Okay. Pay attention now. See, sir. Sorry, I have to copy also. What is happening? Come to your notes. In your notes, you are writing this, no? Done with this. Now write down bonus shares. Next bullet, like this. Create one more bullet. Write down bonus shares. Original shares you acquired by giving the money, by spending an amount you acquired. Bonus shares you will acquire or it will be allotted, it will be given, it will be issued. It will be issued. Because you are the shareholder, you are holding these shares. As a result of that, you are getting the bonus shares. Are you the shareholder of Reliance company? Holding the shares of Reliance? Yes. Then Reliance will issue the bonus shares to all the shareholders. So you are also one of the shareholders holding the shares of Reliance. You are going to get what? Bonus shares. Will I get? Yes. If I am the shareholder, I will also get. But if I am not the shareholder, can I tell the Reliance, you gave the bonus shares to all your shareholders. Why you did not give it to me? Reliance will say, you are not my shareholder. To get the bonus shares, you buy the shares first, become the shareholder. And once you become the shareholder, based on your shareholding, we are going to issue bonus also, no? So to get the bonus shares from Reliance, how much you paid to Reliance? Come on, tell me. How much amount you gave to Reliance to issue bonus shares to you? Did you give anything? Not a single penny. So what will be your actual cost? Nil. What will be your actual cost? Nil. That will be your cost of acquisition. If you acquired the bonus shares on or after 1st April 2001. But what if you acquired the bonus shares prior to 1st April 2001? Cost will be nil only, no? Hello, actual cost will be nil only, no? But will you get that option to take fair market value as on 1st April 2001? Absolutely yes, you will get. You get it for all the assets except 55(2)(a). Understanding? So bonus shares also you will get that option to take the fair market value. And now you know what? This fair market value will be higher than actual cost because actual cost is nil. So always the fair market value will be taken as what? Cost. In case of bonus shares which were acquired prior to 1st April 2001. Will you remember this? Sure. So now let's do one thing. Let me write this now. Now I'll copy this. Copy, then paste. My favorite thing. Tell me, original shares instead of this, what should I write? Now I will write bonus shares. Now can I say these bonus shares were not originally acquired by you? Bonus shares were allotted or issued based on holding of what? original shares. Getting it, sir? Now, what will be the actual? Keep it same as it is. Pay attention. You will include one word over here. Actual cost, which is nil. And here also, actual cost, which is nil. Same to same. Nil or fair market value, whichever is higher, fair market value. And there, actual cost, which is nil only. Did you understand this much? For what reason we are doing all these exercise? Come on, tell me. For what reason? In future, no, whenever you will sell your bonus shares, you will calculate the capital gains, no? What cost you will reduce? The law is telling you, take this cost. Whether the gain will be short term or long term depends on their period of holding. Take period of holding from this date to this date. It should be 12 or less or more than 12 in case they are listed. It should be 24 or less or more than 24 in case they are unlisted. Take the cost without indexation if they are short term. Take the cost with indexation if they are long term and transferred prior to 23rd July. Everything which you have written here no will be copy paste. So one by one you are going to tell me, okay? One by one. Come on, tell me. What will be the period of holding of? Come on. Period of holding of. Can I say unlisted shares? Unlisted shares can be original shares also, can be bonus shares also. Listed shares can be original shares or bonus shares also. Period of holding is not going to change. No, it will start from this date and on this date. So when bonus shares, when did you start holding the bonus shares for the first time? The date on which they were allotted, if they were unlisted. And what if they were listed? The date on which they were credited to your demat account. Hello. From that date only you are start holding them, no? So here from date of allotment till date of transfer, and here from date of credit in demat account, date of credit in demat account till date of their sale. Yes or no? Now this period you will check 24 months here because the shares are short term. Sorry, because the shares are unlisted. And you will check 12 months over here. You have to check 24 months if transferred prior to or on or after 23rd July 2024. Will not make any difference. Every time you will check 24 months only. And for them, every time you will check 12 months only. Yes or no? What if, sir? What if this is less than equal to 24 months, sir? Then the shares will become short-term capital assets, sir. Have you determined the cost of acquisition? Yes, sir. Cost of acquisition was given in 55(2)(a). No, sir. That cost will be indexed or will not be indexed, sir. Indexation will not be available because they are short term, sir. Okay, sir. Now, if more than 24 months, then sir, then they will become long-term capital assets, sir. Then cost of acquisition will be same, no? Cost of acquisition will be this only, no? 55 to double A. But now they will be indexed or not? Depends that when the transfer took place. If the transfer took place prior to 23rd July, then indexation benefit you will get. And if the transfer took place on or after 23rd July, then you are not going to get any indexation even if they are long term. Hello, sir. Cost will be same. Now that cost which you have determined, in this case, indexation available if prior means what? I am writing only prior means if the transfer is made prior to 23rd July, then do the indexation also, because now they have become long term. Yes or no? And what if after? Then indexation will not be done. Indexation will not be done if they are on or after. On or after means what? On or after 23rd of July 2024. Very easy, this is very easy. Now come this way, this side. Can I say copy paste? But instead of 24, everything will be 12 months. So 12 months you check. Okay. And start from here. Here everywhere what you will write? Instead of 24, now you will write 12 months, 12 months, 12 months, 12 months. Yes or no? And do the same calculation. Do it in your textbook. Come on, fast. Do it in your notebooks. Instead of 24, now it will be 12. 12 or less, short term. Cost of acquisition as per 55 to double A. No need to index. More than 12 months, long term. Cost of acquisition you already know, 55 to double A, which you have already determined this one, this cost. Yes or no? Will not be indexed or will be indexed, depends that when the shares were transferred. All these complications will be limited from next year onwards. This year the concepts are complicated, but I am trying my level best to make them easier for you. And I hope I am successful in doing that. You all are understanding. Okay, very good. So are you all done with this? Till this everyone clear? Now wait. Now the next asset. Again, see, we are into 55 to double A only. Huh? First asset we have done, original shares. Now based on the original shares, you got what? Bonus shares. We have done this also. And now we are going to discuss about the third asset given in 55 to double A. And the third asset is, friends, right offer or right entitlement. You can call it right offer also, you can call it right entitlement also. Call whatever you want. Okay? Now pay attention. The right offer or the right entitlement is what? This is a right to acquire. Right to acquire or right to purchase? Okay, no? Right to acquire or right to purchase. Additional shares of the company at predetermined price. And this right is based on Right is given to shareholders, existing shareholders. Now pay attention. We are talking about right offer or right entitlement. Okay, no? What is this right offer, right entitlement? This is a right given to you by the company to acquire additional shares of the company at a predetermined price. This predetermined price will be very lower price. And the additional shares which you would get, they are known as right shares. So you are getting a right to acquire right shares. Right to acquire right shares. And this right you get based on the existing shares which you hold. The company is offering a right in the ratio of 2:3, meaning that 2 shares for every 3 shares held. For every 3 shares held, you are going to get 2 shares at this price if you exercise this right. So you are getting a right. You are getting a right to buy 2 more shares of the company if you are holding 3 shares. If you are holding 3 shares, you have a right to buy 2 more shares at a very cheap cost. Only rupees 100. Go and check. Market value of the shares is very high. And we are going to issue these shares after a few days. If you don't exercise this right, no. So we are going to issue these shares to outsiders. And from them we are going to charge 250 per share. Not 250, that will be too much. We are going to charge 150 rupees from them. But since you are the shareholder, no. The company is offering you 2 shares for every 3 shares held at a very cheap price of 100 rupees per share. And you have got this right. And if you come and if you exercise the right, so if you are having 300 shares, you can buy 200 more shares of the company. Exercise this right, buy 200 shares for just rupees 100 per share. You are getting this right from the company. Now this right you have to exercise within some time, Some time means how much time? This right will be given for 5 years. This right will be given for 10 years. This right will be given for 100 years. A right will be given for few days. Only few days. Today we are offering you this right. Exercise this right within 7 days. Or today we are offering you exercise within next 10 days. After the exercise period, which will be some days, that is over, your right will lapse. So whatever you want to do with this right within this time. Okay, so right itself is coming for some days. It will not come for months, it will not come for years, it will come for some days. This right will come to you. And within those days you have 2 rights. You have right to acquire the right shares, and you have another right. If you don't want to acquire, you can renounce this right in favor of someone else. If you don't want to buy, you can give this right to someone else. Give away the right to someone else. Relinquish. Yes. So that if you don't buy within those days, at least that poor fellow can buy. This right should not be wasted. So if you buy, if you exercise the right, now your right will get converted into right shares. Then there will be no discussion about right. Hello. You were given the right, Within these days, you exercised the right. Now your right is getting converted into right shares. No, we'll talk about right shares. But what if you did not exercise your right within these 10 days or a week time, which the company is giving? Now your right will lapse. So you don't want the right to lapse. And within this period, you don't want to buy also. So you have another option. You have two options within this period. Option number one, exercise the right and buy the right shares. But you don't want to take this option. Another option is you can renounce the right in the favor of someone who is not a shareholder of the company. Even that fellow can come with this right and get the shares from the company at 100 rupees. Getting my point? So you came to me, you asked, sir, are you a shareholder in this company? I said, no. See, I am a shareholder in the company and I have got the right of 200 shares, sir. I can buy one share at rupees 100 only. I said, wow, so attractive. Right now the value of the shares is too much in the market. And this company is planning to issue these shares at 150 to the outsiders. You are so lucky that you are going to buy, you have got the right to buy these shares at only 100. You said, yes, sir, but I don't have that much money, so I don't want to buy, sir. I said, is it? You don't want to buy? So do one thing now. Give that right to me. Give away your right to me. If you will give away your right to me, you have option to give away to someone. No. So don't give it to someone else. Give it to me. I will take the right and I will go and buy from the company. Can I do it? Yes. Hello? Okay. So now tell me one thing. Tell me one thing. You give me 200 rights. All the rights of 200 shares you give me. Now will I go to the company? Will I exercise the right now? So at the time of exercising the right and getting the right shares, will I give 100 rupees per share to the company? So for me, the right shares will be worth 100, which I gave to the company. Plus, I would have given something to you to get that right from you. You know how much you took from me? You took 20 rupees per right. Still, I am saving 20 rupees, no? Still I am saving 30 rupees. Because company would have offered to outsiders at 150. I don't have to wait till then and buy the shares at 150. Hello, I'm getting the shares from 100 and I'm paying you 20 rupees for your right. Still I'm getting the shares for 120. So what is my cost? What is my cost? 120 only. That is my actual cost. Hello, sir. So the amount which I paid to the company by exercising the right plus the amount which I paid you to get the right from you, total amount 120, that is my actual cost of my right shares multiplied by number of shares which I will buy. Yes or no? But what if the option number 2, renouncing the right, was not exercised by you? You exercised the right. You exercised the right and you bought the right shares. So now you will go to the company. You will exercise this right and tell the company. How much will you pay to the company? 100. So what is the actual cost of your right shares? 100. For you it will be 100. But for me it will be 100 plus the amount which I am giving you to get that right from you. My right shares will cost me 120 because I was not the shareholder. I was an outsider person other than the shareholder acquiring the right shares. So he will have to first acquire the right and then he will have to acquire the right shares. So the cost which he has paid to acquire the right shares plus the cost which he has paid to acquire the right, both taken together will be the total cost of his right shares. Yes or no? But for you, it will be the amount given by you to the company. That's it. Will be your cost of acquisition, actual cost of right shares. Will you get any option of 55(2)(b)? Yes, you will also get, I will also get, provided we have acquired the right shares prior to 1st April 2001. So if I have acquired prior to 1st April 2001, my actual cost was 120 or fair market value, whichever is higher. If you have acquired prior to 1st April 2001, then your actual cost 100 or fair market value, whichever is higher. And what if we have acquired on or after 1st April 2001, then my cost 120, actual cost will become my cost of acquisition. Your cost 100 will become your cost of acquisition. That's it. Did you understand about the right shares? We will write it down. We will write it down. But I was discussing about this now. Cost of right shares we have already discussed. I just have to write it now. But about this, why I have written this, you know? Do you know? You had this right. You had this right. Instead of exercising, you took the option to renounce it in my favor. So tell me, first thing, is this right entitlement, is it a capital asset? The answer is yes. Any type of asset, any type of property, tangible, intangible, movable, immovable, any type of asset is a capital asset. So it is an intangible asset. And fortunately, this intangible asset is not covered by 55(2)(a). This is specifically covered here. So this is definitely not going to go to 55(2)(a). Other intangibles are there. Those intangibles are different. So, and this intangible asset is different. This is specifically covered here. So we are not supposed to cover it in the general category of intangible assets. Yes or no? Consider this intangible asset here only. Now tell me, if you are getting this right, this is your capital asset. If you exercise it, then it converts into right shares. Then discussion is over. But can I say this right? To acquire or purchase additional shares, this right was renounced in the favor of a non-shareholder Renounced means what? Come on, tell me. Renounced means relinquishment, which is equal to transfer under section 247. Do you remember? So this is a relinquishment, meaning transfer of a capital asset. Capital asset transferred. Hello. So if there is a capital asset, there is a transfer, capital gain will be calculated or will not be calculated. Now the capital gain will be calculated in your hands. So the moment you have renounced your right, now be ready to pay tax on the capital gains, because you are renouncing, you are relinquishing your capital asset. Hello sir. So tell me. Now there will be computation of capital gains. Computation of capital gains on renouncement of right. So this computation will happen, sir? Yes, sir. Because there is a capital asset which is transferred. Okay. So to compute this, what will be the full value of consideration? Now you tell me. Come on, tell me. How much you got by renouncing your right? 20 rupees per right you got, no? So the amount which was paid by that non-shareholder for the renouncement to you, isn't it your consideration for transferring the right? So that will be your full value of consideration. Hey, no, not 120, 20 only. Oh, yes, okay. Got it, no? So can I write down amount received from non-shareholder for renouncing the right in his favor? That is for you, that is your full value of consideration. Yes or no? Minus transfer expense, no transfer expense will be there. If at all anything, reduce it. Net consideration will be there. Now tell me, this is very important. What will be the cost of acquisition of this right for you? Cost of acquisition of this right. What will be the cost of acquisition? Come on. Just think, no. You took 20 rupees from me to give away the right. To relinquish that right in my favor, you gave 20 rupees to me. Sorry, you are taking 20 from me. So 20 is for you. For you, that 20 is your full value of consideration which you are getting for that right. So out of that full value of consideration, you are supposed to reduce the cost of your right. No. How much was the cost of your right? Company gave you right for how much? What was the cost of that right to you? How much you paid? How much you incurred as a cost to get that right from the company? Bloody, you did not spend a single penny. You were just a shareholder, no? Because of that, company gave you the right. So this right is not costing you a single rupees, okay? So what cost of acquisition you will take? You will always take nil, and this is given in 55 to double A. You will always take nil, always nil. No other cost will come. Sure, sir. Now this cost is nil. So 20 minus nil, entire 20 will be your short term gain. You will never have a loss over here. If you ever have a loss here, no, send me your SRO number. I will write down a letter to the ICI. Getting a loss here, wow. You will never get a loss. Always you will get gain. 20 minus nil will be gain. If you would have taken 30, so 30 minus nil would have been 30 rupees gain. If you would have taken 15, then 15 minus nil, 15 rupees would have been your gain. Always there will be a gain, yes or no? So after reducing cost of acquisition as nil, can I say gain will be there? Gain will always be a gain. Now tell me, what will be the nature of this gain? Because if you are saying that it is your capital gain, so you will have to now say no that it is a long term gain or short term gain, because without that you will not be able to pay proper amount of tax, because the tax rate will differ. If it is a long term gain, that there will be different tax rate. If it will be a short term gain, it will be a different tax rate. So you will have to define the nature also of this gain. So defining the nature of this gain, first you will have to determine the period of holding. And once you determine that period of holding, based on that you will come to know that whether the rights were short term or long term. See, if you apply some logic, no, you will understand that these rights can never become long term. Because the company gave you only a week's time or 10 days time to exercise. So you would have renounced within that period of some days only, no. So the period of holding will be some days only. It can never be in months or year. It will be always in days. But wait. From which date to which date you will take the period of holding? So in order to determine whether it is short-term capital gain or long-term capital gain, what type of gain this is. See, gain will be always there. But the gain is short-term or long-term. In order to determine, you will have to first determine the period of holding. So period of holding of the right. From which date you start holding the right? The date on which the company offered. From that day you are holding. Till what date you are holding? Till the date of your announcement. Till that date only you are holding. Hello sir, common sense. What will be the period of holding of the right? The date on which the company offered. From that date you are holding. Till what day? The date on which you are announcing. And this everything will happen in some days only. 2 days, 4 days, 5 days, 6 days. Hello. Because if this does not happen within these days, no, right will lapse after 7 days. Getting my point? So period of holding will always be taken from date of right entitlement or right offer, date on which, date of right entitlement or the date on which the right was offered by the company, yes or no, till date of renouncement. So this will be your period of holding. Okay, now check this period of holding. How many months will be checked? 12 months, no? 12 months. Remember the names of those four assets? Listed securities. It is your listed securities, no? Or right? This is right, not listed securities. Second, units. Unit of EOMF. Units of UTI. Zero coupon bonds. Is it any of these four assets? You cannot check 12 months. Two assets. Do you remember unlisted shares, immobile property? Is it unlisted shares or immobile property? Bloody, you cannot check 24 months also. You have to check 36 months. If the renouncement happened prior to 23rd July, then check 36 months. But if the renouncement is happening on or after 23rd July, then check 24 months. In either case, no. In either case, this period will always be less than 36 or 24. Always. It can never come more than 24 or 36. Getting my point? These will be few number of days only and shall always be, what did I say? Shall always be less than 24 months or 36 months. 36 months if prior, then 36. If on or after, then 24 months. Okay, no? So if you are renouncing on or after 23rd July, check 24 months. It will be less than 24 only because this will be certain number of days. If you are renouncing prior to 23rd July, then check 36 months. It will be less than 36 months also. Always. Period will be this. Shall always be less than this. Hence proved. Hence short-term capital asset always. Hence the gain. Hence the gain, my dear friends. Short-term capital gain always. Hence proved. Pythagoras theorem. Have you learned Pythagoras theorem? Standard 9, 10, maths. Very interesting, no? I still remember my sir used to teach me in school. He used to thrash me. It was very interesting, but I never understood. Okay, did you understand this much? Come on, friends, tell me. So this will be calculated by whom? This entire working will be done by whom? It will be done by the shareholder who was already holding the shares. And based on the shareholding, he got the right to acquire extra shares at a predetermined lower price. When that right he will exercise? No. When that right he will renounce in the favor of some outsiders. That time this entire discussion will be applicable. Okay. Because that right renounce means capital asset relinquished. Transfer is there. Capital asset is also there. Now the capital gain will be calculated for right renouncement. And for that, full value of consideration will be this much. Cost of acquisition will be this much. Always the gain will be short term. Always there will be gain. And always that gain will be short term. Period of holding will be from this date to this date. For the right, the period of holding will be from this date to this date. It will be certain number of days only. It can never be more than 36 months. Never be more than 24 months. Hence the right Right entitlement. This right will always be a short-term capital asset. If this is short-term capital asset, hence the resulting gain, which will always result into gain, that gain will always be short-term. And my dear friend, this gain is not covered by 111A. This is a normal type of gain. Always gain. This is always gain and taxable as normal short-term capital gain. At what rate? Normal rates. This is not a short-term gain under 111A. Will you remember? Sure. So now the next asset, last asset is right. What I'll do, copy paste only I have to do. Wait here. Copy. What should I write here? Right shares. Right shares allotted or issued based on right entitlement. Now the right entitlement. Wait, don't write anything. Right shares allotted or issued based on right entitlement. It is allotted or issued to the shareholder only, to a person in whose favor right was renounced. See, the left hand part no is for you and the right hand part is for me. Here, this side, you are there, shareholder. You exercise the right. What will be your cost? Here, I am there. I took the right from you. I took the right from you and I exercised that right. Will you be able to tell me the cost? Sure. Will you be able to tell me the cost? Come on, tell me. The right shares are issued to, allotted to allotted or issued to the shareholder. What will you do here? Come on, tell me. Depends. When it was allotted. Prior to or on or after. If prior to, then your actual cost, the amount which you have paid to the company, or fair market value, whichever is higher. But if it was allotted or issued to you on or after 1st April, then your actual cost, the amount which you have paid to the company, will be your cost of acquisition. Same for me. Prior to, on or after. My actual cost, amount paid to the company, plus the amount which I gave for acquiring the right, that is my actual cost. Or fair market value, whichever is higher. Will you be able to complete this at home today? Sure. 2 bifurcation this side, 2 bifurcation this side. 1 bifurcation prior to 1st April 2001. Second bifurcation on or after 1st April 2001. Same bifurcation at both the sides. Okay, no? Prior to, actual cost. For you, what you will write? Actual cost. In the bracket you will write amount paid to the company. Bracket close. That's it. That is your actual cost. Or fair market value, whichever is higher. Then, if it is issued or allotted on or after On or after 1st April 2001, then your actual cost only. No need to take the fair market value. This option is not available now. And that is the amount paid to the company. Again, write the same thing in the bracket. Okay. Right hand side. Prior to 1st April 2001, talk about me. My actual cost. Amount paid to the company. Open a bracket. Write down amount paid to the company plus amount paid to acquire the right. Amount paid to acquire the right. Now I will have to pay to acquire the right. Yes or no? And by acquiring that right, I will now pay to the company. So I paid to the company also and I paid to you to get the right also. Both taken together is my actual cost. So actual cost you will write in the bracket, you will write amount paid to the company and amount paid to the shareholder to acquire the right. Yes or no? Total actual cost or fair market value, whichever is higher. And if it is on or after 1st April 2001, actual cost, amount paid to the company plus amount paid to the shareholder to acquire the right. Take this, forget about fair market value. And friends, ditto. The period of holding will be this only. 12 months, 24 months. Hello. Indexation to be done, not to be done. Same to same thing. The date on which the shares are allotted to you. From that date, you will start the period of holding. If they are unlisted. And if they are listed, then the date on which you purchased them and it came in your demat account. From that date, you will start the period of holding if they were listed. Listed then 12 months, unlisted then 24 months. Whenever they are transferred, will not make any difference. You are always supposed to take 24 months or 12 months only. Yes or no? 12 months or less, 24 months or less, then short term. Cost you have already calculated. No need to index. Okay. More than 12 months, more than 24 months, then cost you have calculated. No. Now you will index. But remember, the index cost will come only if you transferred these shares prior to 23rd July. And what if you transferred the shares on or after 23rd July? You have the cost. Don't index it. Resulting gain will be long term, but indexation will not be available. Will you be able to do it like this? Okay. So do it by tomorrow. Tomorrow we'll meet and continue from here. Now see, now you all are absolutely ready to solve the question. And tomorrow when we'll, start solving the questions, no, you will find the questions so easy because complicated concepts, no, you have understood now. Few more discussions are to be done, theory discussion, then we'll start with the problem solving tomorrow itself. Okay. So see you tomorrow, same time. Till then, bye bye.